TSLA. Maybe not right now. I mean, I guess we could. Let's just right here.
Okay, there is two stocks that you need to watch because of the coronavirus.
Sure.
It's one Gilead and one is Avi.
Yeah.
Because both of them they have HIV drugs. So now for this virus,
Yeah.
it's kind of like both of them. Yeah.
Is that the one that's claiming to have a positive result?
Yes,
By using
both
it?
of them. So they use cocktail of
HIV and some other stuff in that. Hey, let's see about it.
Yeah,
So those are publicly traded companies?
public trade company, both of them.
Yeah,
I think Gil's using the one that they did for Ebola that didn't work for Ebola. For this one, it might be working for this
For
one.
HIV too, they are using
And
HIV. Yeah.
So a good discussion, Kate, on that whole note would be, what if the coronavirus was solved in a month from now? Let's just say that they get a real vaccine. Let's just say that they solve it.
Sure.
There are no more deaths and that the number of people who are ill start getting better. So let's just say that problem's solved, let's say, in a month to 2 months. So
That'd be really great news.
So the question would be, so which stocks have been negatively impacted the most that are likely to rebound? So for example,
Sure.
Royal Caribbean and Carnival Cruises and United Airlines and all, you can name a dozen of them, right?
Yeah.
So I mean, if you were to speculate that, I'm willing to...
Like blue chips, or like what kind of stocks we talking? Like really
there's
good
some,
ones.
There's some very powerful companies, United Airlines, for example, that have gone down, let's say, 5 to 10%,
Yeah.
right? That are likely to, when that news comes out of, let's say, of a breakthrough, solved, whatever, are likely to be positive, even for emotion or rationale or other, are likely to go up fairly significantly.
Yeah.
Right?
Yeah.
So the question would be, which of the ones have gone down the most, that are the most likely to rebound when some breakthrough is done? If you're willing to put 10% of your portfolio in that kind of a bet, we'll call it, then I think that's a reasonable bet, because hopefully it gets solved sometime.
Sure.
But Luckin Coffee, for example, I bought that, I'm down about 10,000 on that one. I mean, that one has gone down from its peak, went way down.
Yeah.
And it sort of oscillates, right? Every time good news comes out, it goes up, but
Yep.
bad news goes down.
Yep.
So will that company go back to where it was, 50% higher than where it is now, right? I mean,
Yeah, I mean, looking at Luckin Coffee, I mean, it looks pretty bearish at the moment. If it can't sustain 35, I mean, I like to see above the 50-day moving average. I did see a huge buying amount right here, as well as right here. So this dip might be more so from the coronavirus, a mixture of the coronavirus as well as the.
The one that took the biggest hit because coronavirus are the ones that are going to be like a lot of people all confined into one. They got to spend money. They're afraid to go. They'll be the cruise lines.
Yeah.
Cruise lines for
Well,
sure.
I think Apple's. I think Apple's pretty darn vulnerable. Just saying.
No, it is definitely, but it's not as vulnerable as Carnival. Carnival, nobody's going to go on a cruise if the coronavirus gets really bad. And look at Carnival's already taking an excuse because the market knows it and they're projecting huge fallout.
Yeah. So.
right.
So I mean, I have this list right here, right? Last time we looked at the China life insurance company, that one took a pretty big hit. This one is a $100 billion company. So this one, since the beginning, was at 1450 down to 12. So it lost quite a bit of market cap value. But this would be a list of blue chips that are taking a hit in the past month. This is how I would scan for opportunities.
So there probably isn't an ETF called, coronavirus ETF.
Not yet,
or
no.
Get Better, right?
No.
So you're almost inventing your own.
Like
It's
a
you
pan-
said,
yeah, exactly,
Royal
a
Caribbean
pandemic.
Cruises is in the toilet right now.
Carnival.
Who wants to? I got a call from one of these
Oh,
freaking
yeah.
telemarketer cruise guys. Right? He says, "Yeah, we'd like to get this cruise to the Bahamas, or whatever." He said, "Isn't there kind of like a virus thing going on now?" And he goes, "Yeah, we get that a lot, right?" So I mean, clearly, who here is going to go on a cruise?
And
Right?
so I'm guessing you guys all heard about that news, right? The coronavirus in Japan, or
Yeah,
the
it's like you're
cruise.
stuck on a boat where there's like 10 people that have it, and you're stuck in your cabin for 2 weeks.
Yeah.
So,
Yeah,
right.
and there's like 3,000 people on the boat. That's a lot of people.
Right, so there's the idea that you go through and you pick out okay, Royal Caribbean, Carnival, United Airlines, Luckin Coffee, pick 10 of them that are all in the drain, like 10 to 20% down because of it.
Yeah,
that
sure.
should this get, and who knows, that coronavirus thing could take a year to be solved, right? I mean, you don't know.
I
right?
think so. I think so.
Yeah, so look at that thing, that's like,
I heard it's never going to be solved. It's like a common flu.
oh, well, there you go. So as long as there's some sort of treatment though that stops people from dying, right?
Yeah. So so this is a pretty interesting chart right here. So this is a comparison of the infection growth, right? What we have in the red is the coronavirus, and then you have the blue as SARS. So, I didn't go down all the way. There you go. So from an infection wise, this is more infectious than swine flu and SARS.
Right. More people have died from this than now the SARS now, as of yesterday.
Yeah, as of yesterday,
Well,
right?
let's not forget the mortality rate is 2%, which is extremely low.
Yeah.
2% is not, Ebola is 70%.
Yeah. I don't mind having a smaller crowd today too, like this big.
Yeah.
I mean, like 2 weeks ago when we first kind of heard about the coronavirus, like people in here were coughing, and I knew some people went to China, so I was getting paranoid. I had to kind of just cut back and say, hey, okay, no lecture for a week, but if we get this amount of people, I'd be okay with that.
So, okay, the reverse of what I'm saying, of investing in companies that are likely to rebound, the reverse of that is, which companies do you invest in that are least likely to be impacted going forward with it? So,
Yeah.
like, for example, is Microsoft really going to be impacted by the coronavirus? Doesn't
No.
look like it. Does Amazon,
The cloud stuff,
that
no.
Amazon is actually better off, because who wants to go to a store when I can get something delivered
Yeah.
to me? I
Yeah.
can spray the box with Windex, right? I mean, I think you're exaggerating. But I mean, like, all those things of like anti-shopping in a mall places
Yeah.
could theoretically ShopRite, all these places could all go up because people are fearful, and if it gets to become a panic, I went to Costco yesterday. Oh my God, it's like shopping in a hospital. I mean, it's like, I couldn't believe it. I couldn't believe it. Like, there must have been 100 people wearing masks in the place. It's like, I thought I was at Kaiser.
Were they really?
It's truly
Oh my gosh, I didn't
like,
even know that.
I'm surprised they don't have masks when you walk in. Like,
I haven't been really going out. I've been kind of just like trying to stay
It's
low.
truly amazing.
Well, I went to Target, and then I noticed like at the pharmacy section they said all masks are sold out. And I'm just thinking like, is this really that getting that bad already?
Yeah.
Or
yeah.
people are really? I mean, some people are just buying out inventory of masks
Yeah.
Absolutely.
for the sake of it. So I don't know. But 2 weeks ago when we met, right? I anticipated. I said I expect volatility to be coming in like the next month. So 2 weeks after that, it did.
Absolutely.
But then they also injected money to
Yeah.
save the corona. So now so if you look at the red, right? The red was the moment where I started buying a lot of UVixy calls and stuff, or volatility calls. So it did play out pretty well. But then towards the last week, they announced that they're going to inject money upwards of like, was it 22 billion? Yeah, it was a big number, all across the world. So I just want you guys to think about it. When they print money, whose cost is it? Whose efforts are they deteriorating? Right. I mean, you can't just print money for free out of thin air. It comes at some cost. So where's the cost going? If I were to ask you guys, taxpayers, right? And so if it's the taxpayer cost, then we want to pay as little taxes as possible, because they're just borrowing our efforts, right? So yeah, so they announced it, and then markets really ripped up higher. If you ask me today, I'm kind of shocked by this move a little bit. Not too much, but I can't really anticipate where markets want to move next. But I would say there's a lot of negative underlying news, right? Coming into the markets already before the coronavirus, we've already had like a pretty extended stock market, and I mean markets all around. So I just feel like the coronavirus is like the cherry on top.
Yeah, but on a positive note, though, the number of companies announcing positive results
Yeah,
and
it was pretty
positive
good.
guidance is actually more than 50%. So it's sort of telling you that if you took this corona thing off the table,
Yeah.
business activity for October through December is pretty spectacular, and that January through March outlook is still positive.
Yeah.
Right? So if you can
Yeah.
remove that corona variable from this,
Yeah.
which companies are not impacted by this as much? Like, is American Express, well, kind of travel related, right? But it's like Cigna Insurance in the United States. Are
Yeah.
they impacted? Maybe not. So, I mean, companies are raking the dough and are likely to do well in January through March, except for the virus is the scare of people saying, I want to take money off the table, take profits, and watch on the sidelines and see what happens.
Yeah.
So very, very interesting.
Yeah, I mean it's a dynamic environment, but I mean that's my take on the markets. Okay, just a quick take, and then we also had some great earnings as well. This is one that I don't know if you guys are playing Twitter, but I like Twitter. Yeah, so this one's kind of recovering pretty well, I'd say. This one to me looks like a long. Again, this is educational opinion only. We did have a gap down, but this gap down on the previous earnings, they had a lot of user growth, and they still have user growth today. I think it was like 21% user growth. This to me is typically indication of a long, so I'm comfortable adding here as long as the 200-day moving average holds. Anyways, dude, it's been 2 weeks, but like I feel like it's been the whole month for me. I don't know why. Has it felt long for you, or No?
We all missed you.
Did you really? No, I seriously feel like it's been really long. So I don't know. I feel a little sluggish. I mean, I'm not sick or anything. I vitamin C up over here too. Yeah. Anything new with you guys? How are the markets? How's everything? Anyone?
Well, just comment on this Twitter, by the way.
Sure.
So there's a lesson to be learned here. Okay, actually, I bought that stock at about just when they came up with the results, when it's like just when it tanked.
Yeah.
So there's a lesson there that if you can't stomach paper losses,
Yeah.
and you're going to just let it go and so on, you're not going to do well in the market overall. But
Yeah.
if you buy companies that are fundamentally strong
Yeah.
and are willing to ride it out, it's back to where I bought it from when it tanked. So
Yeah.
I mean, you've got to have some patience and some diligence of being able to invest in companies that are sound and be willing to buy several of them, like buy a dozen or 2 dozen of them. And even if he gets wrong on a Twitter, let's say, and goes down, 8%, it comes back eventually because the fundamentals of the company are sound.
Yeah. Yeah.
So even if he gets wrong on 2 or 3 out of the 25,
Yeah.
those 2 or 3 eventually come back. So you timed it wrong, but no one can time it. So you spread that that timing problem over 20 or 30 solid, profitable, strengthening companies, and over time you'll do well.
Yeah.
I mean, that's what that tells you right there.
So from a trader perspective, right, we wouldn't have got this. Like if you're actively trading, you should consider taking your profits or even losses before earnings. So typically for me, I like to just if I know my contracts are, let's say, 6 months and I have earnings coming up, I'd like to just take it. Or especially at 3 months, I like to just take it for a trade. But if you have like long dated leaps where you're holding like a year or 2 out, then I would hold it through this, something like this. But because I understand the sound fundamentals, or the fundamentals of the company, the trajectory of a software company, a consumer internet software company like this, experiencing a lot of growth, I am bullish on Twitter, and so this is sort of my forecast in terms of where prices wants to go. And this is very also dependent on the S&P 500 and how that one behaves too. Because right now, we're coming at a time where, as we met 2 weeks ago, I said that I'm anticipating volatility in the next month, and today is 2 weeks later, right? We did get volatility, but we also got coronavirus, with the cherry on top. And so they started injecting money, like really seriously, because this seems to be a more serious problem than it looks if you look at the actions of China, not so much the data, because anyone could, at this point, go and look at the data in China, right? You could go to, where is it? You could go to the, this is probably the source that everyone's looking at. You could go to this website and just look at the data and see like, okay, how bad is this virus growing? Last time when we met 2 years ago, this was at 2019. I remember because it's like 2019. So 2 weeks later, we find out there's 37,500.
Wow, that's crazy.
Isn't that insane?
Yeah.
So the last week I was going to host, I was going to do the lecture, but then I was like, okay, we just found out we had 2, people infected in Santa Clara, and if it could spread this quickly, I might want to hold back.
Right.
So today I decided to have a lecture. I mean, even though I'm a little nervous, right? I got the vitamin C drink and all that. Yeah. It hasn't spread locally yet, or I haven't heard anything, so I figure, okay, it might be okay. But if that 2 infection in Santa Clara becomes worse in the coming weeks, then I'm going to cut back again in terms of lecture. Sure. And I just figure, because if it spread that quickly in China, I just don't want to see it spread quickly in South Bay, right? So yeah, in terms of the way the markets reacted, I think this should have been like a great, I think the markets should have been taken down a little bit more, but they came in with money injection, so that really ripped the markets up. Because if I recall, China or USA and Europe, they're all saying like, hey, we would go to the limits with money printing or providing liquidity just to hold up markets. I mean, that's like the direct way of saying it. They didn't say it that way. So when they said that of this week, the markets rallied sharply higher. And that kind of really fueled the Tesla mania as well. So this week was like, the news for like, I don't know, the speculators, investors, traders, everyone that's involved in the Tesla trade. Personally for me, I don't touch that type of trade. Typically, Tesla, that type of move, I know it's it's parabolic and eventually it's gonna cap out and then break down. Because I mean, if you calculate the value of Tesla today, it's at one point it was at 160 billion in market cap. I think it's currently 135 billion. We could double check, but that's like the size that's bigger. That's almost the size of Toyota.
That's right.
Which has been in business since forever.
Right.
It's bigger than GM and Ford combined.
No, GM, Ford, Fiat, and Honda combined.
Yeah, sure.
Right?
Yeah.
160 million because some of my friends ping me. I'm like, this doesn't make sense. It's GM, Ford, Honda, and Fiat Chrysler all combined.
So as a powerful lesson understanding Tesla, right? Like I said, this is like a great contra trading indicator. When someone that doesn't historically play stock market, invest in stock markets, start talking about a stock, then you know that this stock is very hyped, very easily manipulated. There's a lot of energy in that security, so I would avoid that. But from a trader perspective, I would trade it if you know how to trade it. So yeah, that's currently where I feel like we're at in the world.
There's also a lesson about shorting, by the way. So people that
Yeah.
short that stock
Yeah.
lost billions of dollars. With shorting, there's unlimited losses.
Yeah.
Right. So that's part of the cause of, well, I can't stomach a paper loss that's getting worse. So I'm going to get out and buy, which drives it up, right?
Yeah.
So I mean, what do you do with a stock that's up 100% in a quarter, and they're still the same business they were in the previous quarter, right?
Yeah.
So I mean, do you do what I do, which is, well, sell half of it. That way, if the stock goes up, you feel okay. But if it goes down, well, at least I still made the profit on the half of it. Something like, you know what I mean? Like, but that kind of an increase is almost like 1990, .com.
It is. Oh, it's
right?
exactly like
I mean, it's
2000.com. Yeah.
Boom, right? I mean,
Yeah.
should it really go up 100% in 3 weeks? I
Yeah.
mean,
This is,
No stock should.
right. I mean,
like, I think it might go higher. I know it sounds crazy, right?
good.
But I'm not. I'm bearish on it, right? So I'm being respectful of the reality of the marketplace.
Right.
Like you guys understand that there's like there's the fundamentals, and then there's like the reality of the marketplace, right? Sometimes the marketplace will ignore the fundamentals, like okay, how many cars are losing money? They don't care about that. It's just become a casino.
That's right.
So this is what a casino looks like
Yeah.
in the stock market. Sometimes okay, I'm not saying the stock market's a casino, but like if you know how to hunt for a security, like let's say Twitter, that does not look like a casino to me. That has like some sound valuations behind it off of some growing, fundamental user numbers. This one right here, I know the fundamentals, and it's more of a concept stock, right? I know. Sorry, Joe. I knew you worked there, so it's like you're like you've had a good week. You've had a good week, so you can take some hit today. To me, it's just the emotions got out of control. If you want me to kind of annotate and give you, what I think of the emotions, or through just looking at the marketplace, ignoring the fundamentals, right? We know the company's not profitable, it's low margin, and judging from this, I previously said this might be a software play. Oh man, the charts are so.
For me, the perfect signal that that I took a bearish position when my wife came and talked about Tesla. She thinks that I gamble when I open my laptop. She came and talked to me about Tesla. I'm like, okay, I'm going bearish on it.
Yeah. Okay, so, I do apologize for the picture, but the charts are very stretched out. So I'm going to use this one that I took previously, but I just want to show you guys like the classic technical analysis still works on it. So I'm going to annotate this picture right here. So if I pull this out, this is typically how I detect. Now, even though, like I said, there's two bodies of knowledge. There's the fundamentals and then there's the technicals. The technicals tell you about the marketplace, what's going on in the marketplace. This is all technical right here. Fundamentals tell you a different picture. Usually for me, when I find like a great stock, I like to have a mixture of both fundamentals and technicals. Sometimes for enterprise software, though, they don't really have great fundamentals, but they have like other qualities like I guess qualitative analysis, where it's like I said, it's a strategic asset of another corporation where they'll just buy that out. So I like to stack different situations, right? But if I were just to do a marketplace analysis of Tesla, this would be like the indication to get out, because typically when I see something like this, a gap up, this is most likely on earnings back in November, assisted with very high volume, that tells me it wants to go higher. So what happened after that gap up? If I switch over to the red right here, it gapped up right there, it just sailed sideways, right? And then it started making new highs, breakout to new highs. So that's typically why I wouldn't consider going short, even though the fundamentals are not that great. Now where it's at is at 1,000. It seems like it hit a psychological number, resistance at 1,000, and it's kind of just taking a little break. I think we could do another run, because the logic behind that is because this is purely not investing, okay? It's just me analyzing like marketplace psychology. So what happened was it gapped up right here at high volume, it went up, this, and then it hit some resistance near the 1,000 mark, right? This is the first dip, right? And usually the first dip is like, okay, the guys who were not in it that want to gamble now, they're like, I need to get back in, right? And then shorts will try to short it down, but then they'll get short squeezed, and then it'll push it higher. So I think with the way the way it looks, this possibly could go and hit 1,000, and then come back down. Now long run is going down, because you can't achieve something that Ford and GM and Ferrari and all that took years to achieve in, like, what was it, 2 weeks? No, realistically, I think people get too emotional about that. So you could trade it. If you use options, there's a lot of premium involved, meaning it's going to be really expensive. If you do shares, if you're going to do short, I think other people want to short too. It's probably going to get called back and you're going to get squeezed. So yeah, I would just day trade it if you know that.
Yeah, for me it was a good option play. Make something.
Yeah.
Options. I can nowhere think of shorting the shares.
Yeah.
You buy some puts, what strike do you buy the puts at?
I got it 680.
Just have to.
And in 2 days it was like 40% up. I sold it. I still have put at 500, which is expiring in May.
Yeah. Yeah.
Because I think it'll finally come down to the sanity level, but I'll give it myself, few months.
Yeah. So even though you didn't participate in this trade, I personally think it's very, very educational to look at these charts, because I see this all the time happening in the markets, whether it be in the penny stocks spectrum. So okay, so real quick, if I draw a bell curve, right, the vast majority of stocks out there is something like this. So the vast majority is anywhere from 1 billion to, let's say, 20 billion, right? And then anything above here is like 30 billion plus, right? And then your MAGAs, your Microsoft, Amazon, Google, and Apple at $1 trillion in valuation are typically out here. So this is where the MAGAs are at. MAGAs is like a new term.
Yeah.
Because there's like, we have four companies out there that are $1 trillion. Well, currently Amazon is right below $1 trillion, but it's going to be $1 trillion anyways. And then the vast majority of this should be 300 million below. So 300 million or less. So this typically right here is penny stocks, right? This over here is where I focus. So when I'm looking at enterprise software, something like a Medallia or PagerDuty or Twilio, they typically fall in this range because it has a lot of upside in terms of the market cap value. Tesla today is at 100 billion, so it's somewhere over here, right? So it's at the upper end with very poor fundamentals and a very volatile world that's coming. But I think the crowd is, very drunk and could potentially drive that higher. So I don't know, but when we're talking about bubbles, right? The reason why, if you didn't participate in this trade or whatever, it's still a great learning example. The reason why I brought up this curve right here is because that I see bubbles, that same exact bubble would occur here, right? The example I gave is like the hazmat suit, right? When Ebola was out or whatever, I forget, those stocks would spike just like Tesla and then tank back down. It also happens here, but when it happens here, they tend to keep going. That's the difference. Now Tesla, that same mania is happening over here. It's not happening over here, right? Over here, I understand if it happens, it will go down, and then over time, it'll go higher. Tesla, I think it's going to go sideways. It's going to go down and go sideways for a long time. But right now, it's just all that value is just in there. I think it's a great short if you know what you're doing. You really have to time a short. It's an active short. It's not like a passive short, where like Beyond Meat, right? Where once it broke down, you could just sit back. But right now, I think the crowd is still the front side of the move, they would say, meaning the crowd is still bullish on Tesla. So I would avoid that. Any questions or any insights? How was the roller coaster for Elon?
One additional thing to note about the Tesla shares is that it's whichever way you want to look at, whether you want to go long or go short, it's going to be volatile, right? Because the number of shares outstanding in Tesla is like 147 million.
Yeah.
Less than 150 million shares, which are
Yeah.
the available flow. So which is nothing. If you look at Apple, it's got 4 billion shares. Bank of America, I think 7-8 billion shares. So 150 million shares means anything, if it spikes up, it's going to be a short squeeze, or if somebody, trying to dump it down, just because the amount of shares available in the market you trade is only 150 million, the ride is going to be really volatile.
Yeah.
That's one another thing we should look at?
So to show you guys the valuations, right? So what I did right here was I filter it by auto manufacturers major. So this is all the auto in the world, right? Or the majors. And obviously you have Toyota right here at 234 billion in market cap. Tesla at one point was at 164 billion in market cap. So if you were to think about it, the other major USA, so this one, well, the Tesla's USA, but USA right here, and then USA right here, GM and Ford, right? Their combined market cap doesn't even beat Tesla. And so from a production perspective, I did see some charts. This was interesting to me. Top 10 automakers versus Tesla. Millions of vehicles delivered globally in 2019. So I'm not putting this out to talk trash about Tesla. I'm just saying sometimes in the marketplace, the technicals or people get really excited, it could become a casino. And right now I perceive those charts as very casino-like versus it's, oh, you can't even see the bottom. Versus it's fundamental. Yeah, you're probably wondering like, what does this chart mean? Yeah, it's stupid. So Go to Meeting had an update recently, and we can't really get that out. But anyways, this is the global production in the millions across the world, and you see Tesla hasn't really produced that much, but the value's kind of pumped up there. So if I was a trader and investor in Tesla and I caught this huge move, I would try my best to take some. It's going to be hard, but I just take some off the table and then get back in later. Because this is basically, like I said, no empire is built in like one day or in 2 weeks. If it's built in 2 weeks, take the money off the table, let it collapse a little bit, then get back in, and you created some wealth for yourself.
Absolutely.
It's almost like a very fast-moving 2008 in your favor. Hopefully, if you position right.
Yeah, buy a Tesla. I mean, it's like, hey, having to buy you a Tesla.
Yeah, because this is a moment. Think about it for a second, right? This is a moment in the world where you have liquidity coming from the rest of the world. Meaning, you have a position in Tesla, and the rest of the world got sold on this concept, and wants the value to exist today, brought the security up to 165 billion in market value, and you just got like, I don't know, 5x on your money. It'd be wise to take some. How high can it go? I don't know. Depending on, we all have, how long can you run before you get tired? That's how high Tesla could go. At some point, the next buyer is going to get exhausted, and then it's going to slowly break down. But right now, I don't perceive a breakdown yet. I just perceive the first pullback before another move up, because that's typically how emotions go. I don't know. I don't gamble, but I feel like watching the stock market long enough, it'll be like, okay, all right, I'll take a position, and then it starts going. It's like, oh, I'll add some more, and then it goes really high, and then it pulls back, and you're like, okay, finally pulled back. I'm going to add some more. So I think that first pullback is kind of like that in terms of the way I see emotions out there.
It's the same. No one ever went broke taking a profit.
Yeah,
Right?
and in terms of applying technical analysis, like I know, like I try to apply technical analysis very objectively. I found that in environments like Tesla, like right now, they work the best. Meaning it's like it's not like a low volume situation. It's a situation where it's a lot of volume, a lot of crowds involved, a lot of emotions involved. So technical analysis works really well. Versus when it's low volume, no one's there, TA doesn't really work. So that's my take on it.
So let me ask you, I love the question that you asked, how far can you run before you get tired?
Yeah.
Anything in the technical analysis that will give you an insight of that, an answer to that question?
No, so you could look at the technicals, right? Like you could look at like MACD and RSI over here. RSI was saying that it was completely oversold since over here, if you were to back test it right here. Mm-hmm. But like I said, sometimes you want to look at the technicals where this is a gap up on high volume, so the trend has changed or got really bullish, but the RSI was telling you to get out. So I don't like to listen to that, because I like to annotate and put meaning behind the charts, like what's going on right now.
So how about on the fundamentals then?
How bad on the fundamentals?
How about on the fundamentals? Any indicators of how, to your question, when is it going to get tired?
The fundamentals won't tell you when it's going to get tired. It's the live marketplace is going to tell you. And to me, it's the charts that's going to tell me. Right now, it's telling me that there's still a lot of energy built up. It's just some big player took their money right here, right? Someone took a lot of money off the table. And my thinking is there still a big enough crowd that's still sold on this to go in and bring it back up higher? And then for some more selling.
So one of the reasons why it gapped down after was because Andrew left from Citron Research. They
Yeah.
initiated a short position, and
Sure.
he made it very clear that I'm now going short on Tesla.
Sure. Yeah.
He was
Yeah.
initially short on Tesla, became long on Tesla, but after it reached 900, he again declared I'm going short on Tesla, and then Tesla tanked.
Yeah. I mean, this stuff happens all the time in the stock market, especially in the penny stock world. Here's Lake.
Interestingly, it is like $160 billion penny stock.
Yeah, exactly. So
Yes,
so
we behave like
so this is a very special scenario, right? Because
Exactly.
if you look at Lake, that was only $100 million company. That's tiny. That's really tiny. Tesla is a $132 billion company right now. So there's a lot of value in here. So this is like for any hedge funds out there that could size up. This is that once in a while, I feel like once in like a decade where this casino opens up in the stock market for them to play. Because it's so pumped up in value, but like I said, from the charts, it doesn't look weak to me. The charts still look bullish. I think this could go higher, right? Because you basically have a decline on lower volume. I don't know if you noticed that. So here, let me annotate again because I think it helps if I annotate it for everyone. So starting from back in November when they had earnings, they had a gap up right here. So investors or traders found it very favorable. It gapped up right here. Started sailing sideways and then finally broke out, cleared the 400 mark and just left and went parabolic right there. Almost hit 1,000, didn't hit 1,000, and then now started breaking down. So I still see that it's above the 20-day moving average. I still see that as holding the $700 mark, and I still think it looks pretty strong. I don't have a 10-day moving average in here, but I think it's holding the 10-day moving average. So this is the first pullback. Again, I think it's just a start to a little bit more.
So
Just
is
a
there a
little
way
bit
to
more.
measure the short squeeze, how much it actually quantifiably impacted that?
Yeah, I think you can, but I don't have that level of data. So what you would need is like to know pretty clearly when the shorts covered.
So
But
is there
I,
a way to know like what percent is in a short position and what that change was over the weeks of period?
yeah, but so I have the data right here. So that's 17% short float.
Right, can you measure that like on a weekly basis?
So I think this one. So the data updates every Monday. So I only have a weekly type of data. If you could have like a daily, that'd be really helpful.
I remember it was at 70 not too long ago.
Yeah, a lot of people were short, right? So think about that for a second, right? It's not just the hype built up in the security, but a lot of hedge funds were short the security.
So like for example, from January 1, what percent of the people are no longer in a short position?
Decreases.
Yeah.
You know what? That's a good question. I don't know if I have
Because
that.
that would be very
I'd like to.
telling, right?
I'd like to look that up. Let me see. I don't think I have that information though. To be honest, 30-year financials, interactive chart. Let's see if I get a short float on this. Short interest. Ooh, maybe I could do. Okay. Okay. So let me see. Let me interpret this real quick. So, short interest. That's probably not what I'm looking
Yeah,
for.
it was at 70, and I noticed it went to 17. I wasn't sure if that was because the price increase somehow skewed it now to non-shorters, or if they had gotten out because of the squeeze.
So the short interest should be a percent of the float, right?
Yeah. So yeah, I'm not sure. I don't have that type of live data. I'd say short term.
Just intuitively, you think there'd be a lot of new shorters in Tesla now.
Yeah. So yeah, I don't have that data, but for me, it's just I could feel like at this point, I feel like I could feel the charts. I know it sounds weird, but you look at it long enough, I could feel the emotions behind the chart, and this is telling me that it still looks pretty strong. So until we break down from 600, that's when I feel like it will start turning the other way. But for now, we might get some upside, because people think like, oh, this is the moment where it's going to tank and go back down. That might not be the case, because they might start taking short positions, and then the next wave of people come in to buy, those shorts cover, and it goes up even higher. So you just don't know. If you want to look at the fundamentals, they did have their earnings recently, their Q4 19 update. So, I mean, it sounds very positive, right? They talk about their cash position, their profitability. But if I read you the quick summary right here, 2019 was a turning point for Tesla. We demonstrated strong organic demand for Model 3, returned to GAAP profitability in the second half of 19, and generated $1.1 billion of free cash flow for the year. We achieved strong cash generation through persistent cost control across the business. Do I want to read that? Okay. Our pace of execution has improved significantly as we have incorporated many learnings from our experience launching Model 3 in the United States. As a result, we were able to start Model 3 production in Gigafactory Shanghai. That might be a concern now with the coronavirus. In less than 10 months from breaking ground, and have already begun production to ramp for Model Y in Fremont. Just to give you guys some insight into, I think volatility is to come. If you guys ever seen like a factory in Shanghai or in China, it looks something like this, right? Some of the big factories out there in China look like this, and seeing the actions or the way the governments are taking actions with the coronavirus, right? They're basically locking up China's economy. If this was like the flu, how come the actions aren't aligning? You know what I mean? Like they're doing a lot more than what the flu. What you think the flu is. So I like, if you guys remember that quote that I showed you guys, amateurs, tactics. So this is one of my favorite quotes. Amateurs study tactics, professionals studies or talk logistics, right? So in other words, I like to say, amateurs talk and professionals take action or study the action. So I'm looking at the actions of China.
Isn't it interesting that the same quote from Bradley is the same as Napoleon, right?
Oh, I'm not going to double check that one, but I want to emphasize on the quote itself. I really like the quote. So.
Tweeted about that too. Yeah.
The same war efforts,
Yeah, that looks like an office in Sunnyvale.
Yeah, right.
It kind of looks like your people with laptops, right? It does.
Yeah.
There you go.
So my perception is that.
People's office.
My perception is that they've injected money early into the markets to hold up the markets. I think there's a lot of poor fundamentals underlying across, right? Again, overvalued stock market, hitting new highs, volatility came, but they injected money. I don't know. I think in 1 month, my view still remains that, like, at this point, I guess there was like a curveball of like money being injected that I'm just thinking like, okay, I was thinking the markets will pull back. Now I'm thinking it'll just go sideways to slightly down. So that's where I'm currently at. My projection for the next few weeks.
When Chinese New Year hits every year, it is a big, it affects a lot of manufacturers. I think maybe mostly small manufacturers.
Yeah.
That 2 weeks when everyone migrates, if that now goes 3 or 4 weeks, I feel like there's going to be a lot of people, executives in rooms right now trying to figure out what they're going to do when shipments stop coming in.
Yeah, so this is China right now. I've been reading a lot about the coronavirus just to kind of understand it myself, to see how severe the situation is, to also kind of figure out, should I host a lecture today? Because we got 2 infections in Santa Clara, right? But this is China, 1.2, 1.3 billion population, and you got like ghost cities now, because they're kind of, the governments are asking them to stay inside, and they get like, they have curfew where you could go out, a few times a week to buy supplies or whatever.
Yeah, once in 5 days, and that's also 1 member per family.
Yeah. So tell me, like, if it's just a simple flu, why are the actions so severe? Right? So the actions look very severe, and again, sovereigns are injecting money. I think they're gonna lose to that, holding up the markets. I think volatility will come. Remember, China, it gapped down like 10% on Monday, and then the money came in.
Yes,
So it's I wanted to share this as well. So if you guys remember this guy's the billionaire who got banned from China. That's actually a pretty cool title, the billionaire who got exiled from China, right? We listened to him previously on Real Vision, but he made a comment as well. So the reason why I'm showing you this real quick is if you go over here, back to the coronavirus, right? It says that there's 814 deaths. Though a lot of the money managers that I listen to and respect on like Twitter and so forth, they believe the numbers are pretty fake. They think there's a lot more deaths than stated. And we were discussing earlier saying like, there's already, we have the internet now, right? Anyone could communicate information across the world. So there's some recordings on Twitter where, Chinese nurses are saying like, hey, We have like
Yeah.
dead bodies coming out every day, right? And this is just a small hospital. Imagine if it was a bigger hospital. And then they're also talking about how a lot of the governments in China are qualifying out people who actually have the Wuhan virus or the coronavirus, saying like, if you don't meet these criteria, like you're in this environment, at this seafood market, whatever, then you don't have it. But they actually have it, but they're classified as pneumonia. So that way it doesn't pump up the numbers than it actually really is. So again, I'm watching this very closely because this could have a substantial effect on silver, which I have a position in, right? Silver is one of my bullish position, but because it's a little bit more leveraged position than gold. But if that was the case, I'd be a little concerned. So I've been observing this virus a lot. But if you ask me, I'm not an expert at all. I don't know what's going on exactly, but I'm trying my best to understand what could happen. So you guys didn't see this yet. I showed it to JC. He came in kind of early, but this is the comparison of the virus to the previous virus that we had, right? The swine flu infection and the SARS infection. Look, check out this rate right here for the coronavirus. It's a lot more infectious. That's the conclusion from this. It's pretty alarming. So I want to show you this video. So just so these numbers are there, we just want to see what some of these guys are saying. So listen to this real quick, or even read it. It's about 57 seconds.
In Wuhan, totally, it's the 49. The 24 hours work, they burn the dead body. Every day is 1,200. They work more than 17 days. Only Wuhan. But now they is in the megapolis. It's a currently out of China is 250 million people. How many people really get confirmed case? And this is outbreak. But this is the outbreak in half China, 200 million people. So I get inside information. Is the truth is 1.5 million people is the not only emotion, is the confirmed case, and that's the people. Now is the burned body more than 50,000, not 30,000 to the now. In Wuhan, totally, it's the 49.
Those are some of the things that I'm trying to look beyond just mainstream news, right? As an investor, I think if you want to get a little bit more sophisticated, you start looking at other news sources. So, but
well, there's a thing in history. 100 years ago, there was the Spanish flu.
Yeah, 50 million people.
It spread really rapidly.
Yeah.
And one of the issues they brought up is, in the way it got the name Spanish flu, is almost all the governments downplayed it. They didn't want to make a panic.
Yeah.
So it was all over the world, and it was killing lots of people. Spain had a free and open press.
Yeah.
So they reported the truth. So everybody thought, oh, Spain's horrible, but they didn't know the same stuff was happening where they were.
Yeah. So 2 weeks ago, I anticipated a lot of volatility, and that volatility I thought was coming, and it really did came. February 3rd, or 2nd right here, if you leave the date on here, China's 22 billion injection may help ease global market route. So that's why I was like, oh wow, they're really printing money. But before that, we were sharing some of the stuff in here I want to share with you guys. So if it's not that concerning, is this the one right here? What was the story? No, that wasn't the one I shared. Some of the authorities are being equipped with guns to handle the flu. I don't have it in here. Wait, hold on. Let me see if I can find it. We talked a lot. Oh, here we go. So here's one. This looks ominous. Police in Wuhan now equipped with guns. You don't shoot or control coronavirus with guns, right? So I'm like I said, I'm trying to look underneath the mainstream news to get visual on this because it could affect a lot of the positions that I have.
There was another post that we saw on Twitter, which was like Tencent. Accidentally, they had a real numbers on their website before they took it down and put in the government figures.
Yeah.
But somebody took a screenshot of the Tencent one, which is 154 infections and 24,000 deaths.
Yeah.
Exactly.
So my logic, coming up into this lecture today, I was thinking like, well, okay, if it's that severe in China, how has the 2 infected people in Santa Clara has it spread? I think there was like 3 people who handled the 2 people that were infected. They were nurses or whatever.
There were 4 people in Santa Clara at Good Sam who had a confirmed patient that they dealt with, and those 4 people were quarantined, but they did not say if they contracted it.
Yeah.
So there's one known case though, with 4 nurses are in a ER environment that were in the same vicinity
Yeah.
that are quarantined.
Yeah.
The problem is that unless you are old, the symptoms are no different than the flu, but the flu is now rampant in the body.
The latency, right? It
Right.
shows up 2 weeks later. So any one of us in here could have it. but we won't see anything. So I thought this was pretty interesting. Something I read this week, the whole Boy Scout stuff, right? I mean, I don't know, I'm not an expert on the virus, but I like their motto as a Boy Scout, which is to always be prepared. So yeah, that's things that I think about coming into this interesting virus environment and lecture series.
So if you want to play the earnings game, CVS has their results on Wednesday.
Yeah.
So are people going to speculate that their guidance is going to be greater than the last guidance because of the people going to CVS to get cough medicine, you name it, anything, drugs, etc. So will people just sort of guess that their guidance will be better than expected for a company that's a mainstream retailer of healthcare, anything? I mean, could be.
Yeah. Real quick, did I touch on the numbers on this? So you guys know who Tencent is? Just to be clear. So Tencent is basically China's number one biggest company. It's basically the Google of China. Well, I mean that's really it's Baidu. So Tencent is the one who owns WeChat, and WeChat is like the one super app that everyone functions on top of, right? So yeah, this is the number that was glitched or briefly displayed on their website. 154,000 infections with 24,000 deaths. We don't know. We don't know how severe, but if that virus could really spread, then yeah, we'll see how in the coming weeks. Anyone have comments on this, or any personal experience with the virus, or something you read that? No. It helps to kind of like just gather information and stuff. Okay.
I guess there was one part in history, World War II or something, where there was starvation in China, but they continued to send relief to other poorer countries. And they use that as an example of how China can be very focused on other things.
Yeah.
Much more on what's inside.
Because I understand sovereigns now, right? They'll do stuff to cover up stuff, right? Like they print money to save the stock market. Why? Well, China is like the manufacturing factory for the world, and if that gets highly infected like it is, and the way they're responding, then I think within 30 days to 60 days, we're going to see a lot of volatility. I think Apple's very vulnerable, right? Because they got 20% of their sales coming from China.
I'm sure Apple plans for those 2 weeks of holiday all year.
Because the earnings that we're seeing today are going to be good, right? So I'm thinking 60 days ahead here and what it's going to look like with the virus, and seeing that it's a little bit different. For those of you who want to get a little bit more insight into the virus, I'm using Bianco Research. So this is like another hedge fund out there or whatever. They're doing research, and I like their models that they're performing. I'll review some right here. We'll scroll down. You had a question?
No, one comment on the virus. I mean, what we know right now is like the mortality rate is 2%, right?
Yeah.
According to China, and now it's spreading throughout the world.
Yeah.
If you look at everybody saying, no, there's so many 45,000 new cases and this and that. The common cold, I mean, we get hundreds of thousands, millions of cases throughout the world, and it is a 0.01% mortality rate. Ebola was 70% mortality rate. That's scary.
Yeah.
But 2% is very low. Now, obviously, if China is lying and everything, we're going to find out because other countries that are getting it right now, like Singapore, United States, Canada, as they get more infections, we're going to see what percentage of mortality rate. But if it stays at 2%, that's extremely low, and they should be able to figure something out in the next 3 to 6 months with some kind of, cure or treatment.
Yeah.
And it could become part of from now on of the world, like a regular cold. Will it have, they just, becomes a coronavirus.
Yeah.
But 2% is very low. That's my point.
All right.
I
hope so, man.
Yeah, I mean, we can only go what we know, right? If they're lying, then we're gonna find out. But as of right now, the facts that we have, it is a 2% mortality rate.
But don't forget, the gentleman who was here last meeting was talking about fear as an influence in the market, right?
Yeah.
Fear and emotion. So you canceled the meeting last week for a reasonable reason, right? Unknown certainty about the situation that they are. Very fair. So what if the general thought is, well, wait a minute, I wonder if people aren't gonna go to movie theaters anymore. Maybe they'll say, screw it, I'm not gonna go see this new movie, I'll wait a month for it to be on Netflix.
Yeah,
So
yeah.
maybe AMC and Lowe's and all these movie theaters are all gonna go frickin' like down 10% because who wants to be in a theater with 500 people hacking away? You're like, and then say, well, maybe I won't go to Starbucks, I'll go there, I'll get a coffee, but I'm not gonna hang around in a Starbucks for 3 hours,
Yeah.
I'll just get the coffee and go. So
Yeah.
I would have spent $20 there, but now I'm only gonna spend $5.
Yeah.
So I mean, add that up and people might say, well, it's not about rationale, it's about what do you think the overall masses will do who own Starbucks. They're gonna say, well, you know, maybe I'll just take money off the table with Starbucks, just maybe they're vulnerable,
Yeah.
that if this thing hits the United States, the last thing I'm gonna do, like yucking coffee or whatever, I'm not hanging out in a Starbucks for 3 hours.
Yeah.
So that goes down, and so does every KFC and every restaurant and every whatever. They take, so just like the emotion around it drives the behavior.
Yeah.
That's what you're trying to forecast.
Yeah, no, I agree. And we could get real defensive, right? And start thinking about like, okay, what companies will really get affected by this and what companies won't. So it'd be a lot of software, consumer internet companies like Twitter. I think Twitter would be like a nice long next week. Twitter had a gap up on solid earnings.
Right.
So moving into next week, assuming there's no volatility, that might be a great long trade. I think if, you know, push comes to shove and this virus, you know, takes down the market, because I think 60 days out, the semiconductors are going to show a lot of poor numbers, right? Because if you think about like Apple and their supply chain, they're heavily, I mean, we're in a world today where if you realize like every day we get more interconnected. So when SARS came out back in, was it 2003, right? We weren't as connected as we are 16 years, 17 years later. So 17 years later today, we're a lot more interconnected. And so judging from, you know, the MAGAs, Apple being $1 trillion, the biggest company in the world, $1.4 trillion, I think that's the most vulnerable one right now, with 20% of their revenue coming from China. So I'd be looking at Apple puts actually. I know it sounds crazy, but it just seems like like if you remember that bell curve I drew, right? It's at the far end. It's the biggest company with the most exposure and interconnectedness with the world. So if this continues to escalate, then hey, I didn't show you this one right here. The other one was tracking the infections. This one's tracking the mortality. So infection growth, this one's the mortality. Any comments on this, or what do you guys think?
One interesting part about the news on this so far is you don't see a lot of news in lower developed countries. And maybe they don't recognize it as being different from influenza or something, but it seems like those countries are probably the places that could be impacted the most. I mean, China can isolate cities, and we in other countries maybe.
The more I think about it too, it's almost like, you know, who's got the inside information right now?
Yeah.
Right, because I mean, China's got the inside information, but they're not really trying to disclose it. Some other interesting charts tracking the coronavirus. Quarantine, reported infections, and suspected. So, probably the quarantine. Again, I'm just showing you guys charts, okay? Confirmed coronavirus infections. This is the estimated or forecast, currently where we are. So, if you guys want to get more insight, this worked well for me. Confirmed corona deaths, and then the forecasted. 200, and this is a little outdated. But yeah, I would encourage to check that out. Let's see. Anyways, I think that's everything. Go over here. Okay. Anyways, shoot, let's get started on the conversation. That's always the case. I mean, are you guys feeling a little like down about like the negativity of this month or the last month? I think the world has. I was just taking a moment to look at the world. It's been extremely negative, from like, you know, assassination or missiles to earthquakes to viruses and everything else.
Missiles? What happened?
Blown up, assassination of, yeah.
Oh,
Yeah,
whatever.
yeah. You're like,
Who
this
cares? Like, really, who cares? Are you serious?
Well,
What happens? Like, a gunman goes in, what was it, Taiwan or whatever, and blows away like 20 people,
Yeah.
and kills whatever, and it's on page 4 or 5 in the newspaper,
Yeah,
in the United States, in Thailand.
Yeah.
It's not page 1, but it's in page 3 or 4 because, it's not the United States.
Yeah.
Right? So, I mean, some guy in Iran that gets blown away, it's not like front page in the news,
Yeah.
right? So, last
Well,
15 minutes on the news and it's gone.
The reason why I brought it up, because like I've been going to the gym like the past 5 days or whatever. I'm like, man, every day, like at the gym, there's like negative news on TV.
Yeah, but what about the
a lot of
what about
negativity globally.
the labor stats that came out that were better than expected
Yeah,
for
yeah.
for January
Yeah,
by a
yeah.
big margin.
Yeah, you got
so that
that.
means that people are hiring, people are spending.
Yeah.
So
And also don't forget, we're 18 points away from the highest S&P close in the history of the United States.
Yeah. So instead of starting with my quote, we can start with this. The market has been up. This is by Howard Marks, by the way. The markets have been up for 11 years. It's quadrupled off the low. We're in the longest bull market, the longest expansion in history. Profits are not rising. Stock prices are. It's what we call a liquidity-driven rally, and that means it comes from people having a lot of money to spend. If you put those factors together, it doesn't mean the market is going to go down tomorrow, but it doesn't. But it does mean that the odds are not, in my opinion, in the investor's favor. So this week I listened to an interview with a billionaire. I forgot his name. This guy's a real estate billionaire, 3 point something. It was on Real Vision. But he himself mentioned, like, looking for real estate opportunities. He feels that everything is just overpriced all around. And he likes to keep it simple. He's looking at, let's say, the S&P 500, and he's just adjusting in a sense. Okay, do I feel in the next 2 years or 2 years plus, is there a 20% upside or a 20% downside? And if he feels there's a downside, which he does, he's going to remain in cash. So it seems like a lot of the billionaires, I'm just looking around, they're sitting in cash. Warren Buffett, if you guys recall, is sitting with 128 billion in cash, looking to buy when the time is right. So this is more broader market stuff, right? It doesn't really apply to trading, but just kind of give you guys a visual on the environment.
you're missing out on a big one, of course, right? The big impeachment word of President Trump was impeached, which was not impeached, which is pretty much expected. But the big one, of course, is that Joe Biden came in 4th place in the election, right? And the one that's coming up is likely not to also be number 1. Now, Joe Biden was viewed, arguably, as the most likely person to beat Donald Trump overall. Now, if it shifts to Bernie Sanders is now the number 1, or any of the other ones, the markets, if you read the Journal, and they're all basically saying that the odds of President Trump being reelected keep going up. I mean, so that absolutely, if that was a certainty, if you knew that President Trump was going to win, the markets will keep going up for sure. If someone like Bernie Sanders wins, guess what's going to happen to the market, right? So, I mean, that's also a variable that people are already having increasing confidence that, for whatever you want to call it, right, that the market's going to keep building on, call it market for millionaires, whatever you want to call it, it's going to keep going up.
But I mean, I think this game is becoming a little insane because CPI is like less than 1.7%, 2%, right? That's the inflation. But wage inflation in certain pockets like San Jose, Silicon Valley, as we looked at the Chapwood Index, it's 13%. Right? I mean, this area inflates quicker because we got a MAGA, we got $1 trillion company next door. Right? So I know there's some new people in here, and I like to bring up that index because I think it's very interesting. It's a privately owned company, I guess, that tracks the CPI. So think about this. We talked about it several weeks ago, but what I did was I arranged it by the 5-year average, and then you have Oakland, San Jose, San Francisco. In the last 5 years, averaged 13% in terms of inflation. So home prices, well, I don't know if it's home prices, but just the basket of goods, the cost of goods, went up 13%. So while we have employees asking for 2%, which is the national CPI. Now when I think about it, why would the sovereigns want to stick with a 2%? Because if it was 13%, well, some of their programs, they would have to pay out 13%.
Because they have the cost of living fixed how they calculate. They started that in the late 80s. They redefined how they're going to do it.
And if
you shadow stats,
exactly,
he does that. He's been doing that for decades.
If you understand technology, right? Since when you say since the 80s, things don't remain constant, right? Our legal system kind of remains constant, but technology goes like this, right? So as technology advances like that, the difference between the legal system and how it works, and technology kind of breeding new environments, economic environments. How does the legal system really adapt to it, right? So we talk about how, the Uber business model, where everyone is kind of just on a platform and working based off of the mobile device. How does someone use precedented legal, knowledge to deal with that today? So yeah, there's a lot of things that are changing, and I realize like certain features about the economy will cap growth as well as create loopholes in society. Like there are things out that we artificially engineer that creates loophole. Like for example, like law, like putting law on top of technology would stunt our growth. That's an example. And the example I always use is the realtor, commission. How it's like it sustains over a very inflating environment. It's just not fair. I perceive. Anyways, yeah, where were we? I forget. Well, I guess we'll just start. Today's lecture number 150. It's been a while. I was thinking I might not make it to this because the whole virus stuff. But today I just basically wanted to talk about stocks. We talked a lot about Tesla's Mania. We could revisit that if you guys want. Also a coronavirus update. I've been reading a lot about that. It scares me a little bit, but I guess not enough for me to hold lecture today because I want to keep it going. I want to keep the knowledge sharp and stuff. Talk about some earnings. There's a lot of earnings that came out, and then just kind of acknowledge the MAGA trillion market caps, or the Microsoft, Amazon, Google, and Apple. We have 4 companies that are $1 trillion now. Think about that for a second. Like some of you will just overlook that, but if we have 4 companies that are worth $1 trillion, and was it 2 of them are here? Microsoft, Amazon, Google. Google, Apple are here. So we have 2 companies here in Silicon Valley that are worth $2 trillion. You think next year the Chapwood Index will say 13% for like cost of living? No, it's probably going to go up like 14% or whatever, right? Because these companies really they deploy capital to consumers for consumers to consume even more, and the higher they pay, well, through stock options or whatever, they could purchase more, and it just makes the living standard harder for everyone else. That's the reality of it. So if you ever feel like working is never enough, it's a global thing from what I see. Starting with a quote. I'm running out of quotes to look for, but I like this one this week. So all great achievements require time, just like all great investments require time. So be patient on your investments. If it's a trade, then hey, it's a trade. We already read this quote right here. So this was 2-3 weeks ago. I talked with a gentleman, and he said, hey, did you know that Ray Dalio has like a really big put option position? And he sent me this link right here. Bridgewater makes 1.5 billion options bet on falling market, right? So I was thinking like, dang, 1.5 billion is a lot. But if you actually go into Ray Dalio's portfolio and look at it live right here, this is a little outdated. I should go to the live platform, but if he actually has 2 billion in puts, right? No, I'm sorry. No. Wait. No. So I don't have that data. So if he bought 1.5 billion in puts, right? I'm looking at what is he doing with his portfolio. Look at his exposure right here. So we know that his portfolio, he has 18% in S&P 500, and that's worth about $2 billion. So he's protecting. He's kind of neutral. He's kind of long S&P 500 by 25% of position if you think about it.
Is that the same as being in cash then? If you're
neutral? I mean, if he brought up to 2 billion. Now the difference with options is that there's also premium that builds up in value. So if the stock market tanks, then premium expands as well as like intrinsic value. It becomes in the money, if you know what I mean. So yeah, just looking at his portfolio, it seems like he's protecting. I'm sorry, it's kind of blocked right here, but this is S&P 500, and then he's holding a lot of emerging markets. So he's probably getting hit right now with EM because coronavirus. But he has gold, bonds, and then everything else. A lot of emerging markets. It looks like more than 50% is like SPY, emerging markets, gold, bonds, and that's pretty much it. And then that put position. But I think this platform right here that I pay for, it doesn't show put option positions, or it doesn't show massive positions like that. Any questions on this? No?
Is this on Guru Focus?
Yeah. So for those of you who don't know, Guru Focus is it's an incredible platform that I pay for. It does really well by showing me just what billionaires out there or whatever hedge fund managers out there in their portfolios. So let's look at the real live one real quick, just to see if it updated at all. Dalio, current portfolio, and here we go. So okay, a lot of new holdings, but I want to see the weighting.
Interestingly, it shows that EM
What do you mean by
Looks
negative
like
50?
Negative 51.1 to EEM, it's holding. The column shares change percentage. Does it mean he sold off and reduced his exposure by 50%? Because I do
Right,
think
right.
I
Shares
think what
change.
we-
Yeah, potentially.
2 months ago, he was very bullish on emerging markets, EEM. Now looks like he's given up his 50% of his holdings.
Sorry, I'm flipping back and forth. I'm trying to see EEM shares 12 million. No, it seems about to be the same. But then the update, this was since 2019, 11/13. Oh, it's the same thing. Yeah. So he I guess he probably would have been exposed or a lot bigger before. Anyways.
Yeah, it seems like he's in a bearish emerging markets now, just in time.
No, but this is like November here, so I don't know after November how things have happened.
Yeah.
So we'll have to wait for his updated file.
Yeah. You gotta wait like a quarter for that.
Yeah.
Hmm.
But generally it is very difficult to conclude it based on, the option trade in terms of what exactly is in the mind of, let's say, Ray Dalio. Is it buying puts because he's bearish on the market, or is it buying puts because he want to protect his S&P portfolio and is still bullish on the market? So it's very difficult to make a decision.
Yeah, it's really difficult. So that's why I just look at the markets itself. This part right here, the demographics, I've been doing a lot of reading in terms of like other dimensions. I'm not going to read this all to you, but it's going to be in here. If you look at this later, you could read it. I found it really interesting in terms of understanding the current millennial environment, the economics at a global level. What are some issues that they're facing and how they're trying to survive in this coming world, right? Because the more I think about economics, it increasingly makes me go to demographics. And I find this stuff extremely interesting because, let's see if I could draw it. It looks something, if I remember how I drew it. Demographics to me, in terms of popularity, looks something like this, right? So it would be generation, let's see, X, nope. It's, sorry. So it would be generation, okay, that's wrong again. It would be generation Y, it would be generation Z, it'd be generation X, and then it'd be baby boomers, and then it'd be silent generation. You guys know what I'm drawing here? Or you guys understand this? This to me is very, so like I said, I'm not going to read this whole entire thing to you, but when I read that, it made me think about this and how every 100 years on this planet, it's a different set of people, right? And this is not in terms of, maybe this might be population, but not really population. The chart, I would say, is showing voting power. So as you can see, the silent generation, now I don't mean to disrespect anyone, I just from more of a objectively speaking perspective, the silent generation, they're kind of exiting the world. And then the baby boomers are kind of just like, right there. X is kind of at the prime, I'd say. They have the baton, they're leading the world, they're trying to figure it out. Y is my generation, right? Our voting power is we're building our reputation in the world. And then the Z is just kind of getting started. The more I think about this in terms of like the global environment that we're in, if you know, we don't have enough to supply. There's not enough, taxes are forecasted to go up because the governments don't have enough to just pay the next generation, right? And so I like this article because it makes me think about stuff like this. So what happens so this is a serious issue because the more we have wealth inequality, I believe there's going to be generational warfare. In a sense where as the generations come up, right, and these guys are in like political offices and they're saying you got to pay taxes to help them exit the world. Think about that. It's crazy stuff, but it makes sense because as my generation comes into this era where we take control of the world, I'd say you'll find them in politics and stuff, and so I feel like a lot of the politics is kind of shaped around the generations and stuff, as well as investment. So I find this personally interesting. I don't know if that like connected with anyone or if you guys geeked out to that, but.
Is this population at all?
No, it's not. No, it's not population. I drew it in a sense of more so from a voting power.
Yeah.
But you could also say it's influence, right? World influence. But you could also say it's voting power because the way I'm analyzing like the legal, not the legal system, but the tax structure, right? There's an increasing amount of tax that's needed to service these people. And you know how they say, the whole pension plan, 401k or whatever, it's gonna bust because it's unsustainable. That's true.
It's not true.
Well,
it's not. Just look at this, the real numbers behind it. That's not true.
I do have
We
them.
can just increase the age for the social security.
Yeah, so there's gonna be creative engineering around like, hey, we'll increase the age to retire.
That's right.
But that's robbing a life.
Well,
Well, you know they're gonna do that.
to me, it works really well as long as there's population growth. If you have
Bingo.
3 workers
Yeah,
per person
yeah,
who's
yeah.
retired, but now if you have 1 worker or less than 1
Yeah.
worker for every person who's retired, then
Money will be printed to make everything.
That's
Yeah.
exactly right.
So when money is printed, who's invested?
well, they're already printing money.
They're already printing money, and we're because I'm looking at from a limb of a. So you know how if you listen to Ray Dalio, right? He talks about like you analyze 5,000 years of history. You know, you'll see like we went through periods of war, pandemics, and then he talks about monetary collapse. No one knows anything about monetary collapse, but it's happened in our history. Over and over, right? And it typically collapses. And when I'm observing it, like, oh, interest rates are like, 5,000-year lows and all that. Commodities are at 100-year low and all. It seems like, how long can we keep going? The more we print money, if you guys remember, I drew that model where, let's say it's, 1% of the population have 99% of the assets. So this is the assets and this is the population, right? And then, 99% of the population over here have 1% of the assets. And then I basically drew that the distance between this will expand because as they print money, assets go up in value, right? And the 1% that doesn't have anything, so the distance will expand, if that makes sense. Because who are the majority that holds assets? In a money printing environment, it favors the people who hold the assets. So that to me will expand, but then now you slap technology on that, on top of that, I'm thinking like that will make it even further. But also from people who don't own assets, technology is going to be the answer to build assets. So that's why I'm extremely bullish on software securities. I need to redraw that. It's not that good.
The bigger
But
the income inequality that we get, I think the higher the chances that the Warren plan, which is taxing 2% on the wealth of people every year, is going to pick up momentum of the nation, and that's what's going to equal things. But that could happen down the road. I'm saying the bigger this becomes, I think the American people are going to get behind that idea.
yeah, because no one's talking about what's happening when coronavirus. We're going to inject 22 billion. No one. I was like, okay, we're going to save the stock market, but no one talks about what's going to happen to the people. So let's say 1% of the population right here, right? But to translate this, I perceive it as the smaller proportion of the people own 90% of the assets, right? And then the majority of the population doesn't really invest. They don't. When I go out there and talk to people, not a lot of people have financial literacy.
Right.
So I'm just going to do 10% right here of the assets. So if this is the case, the distance between this is very important, right? So if we print money, what happens to assets? Asset prices inflate in value, and the people who don't own any assets kind of remain constant, or they just inflate a little bit. So the distance will get longer, and if the distance gets longer, then people are going to start questioning systems like this right here, right? They're going to start questioning systems like this, as in why are we paying taxes? Like I said, I made the comment of like my unborn kids are being taxed. I don't have kids, but I know they're taxed already. We're borrowing from the future. So my question is, understanding the economic system in the world perspective, how much longer can that last before this generation or this generation or this generation starts questioning the wealth inequality and saying, okay, we can't pay those entitlements to the older people. That would be a serious problem then, because now they don't have a plan to exit the world. So that's why I like talking about demographics or reading about demographics. It's extremely important.
So you're saying that we live in an area that has trillion-dollar companies, okay?
Yeah.
The average age of employee at Facebook is 29. The average age of a person at Google is 30, okay? So those are people that are making $200,000 a year in monster companies who are wealthier than their parents are. Was that the case in the 1960s and 70s?
Yeah.
So, I mean, for people that are in tech, who are in their teens, out of college, into their professional career from 20 to 30, there are an amazing number of people doing well. Now, if you take a liberal arts degree,
but I would say that's such a small portion of the population. We're in a bubble zone,
For every one of those people, you got thousands of them in the Midwest that are
I'm talking about the Midwest.
In the Midwest, absolutely
Yeah,
true.
I mean,
You
we're,
can't look at this area and compare it to the rest
yeah.
of the
So going back to this,
True,
right?
very true.
If you look at let's say this area is 1% of the population, and we have like we're surrounded by really great assets like Apple, right? So if they go up, I benefit from human capital knowledge. Employees from Apple will teach me, right? So we're in a very strong environment. It's
They're making
yeah.
under 29,000 a year.
But
throughout the nation.
but my
We
concern
have
is that there's only so few pockets like this.
That's true, you're right.
And so I wanted to show you this chart, but I couldn't find it. But this to me is a pretty okay. Well, this might be a little embarrassing. I'm showing you advertisement and stuff. Let's see real quick. This chart right here. Oh boy, it's too small. You see the global. Okay, so it says global pension systems funding demand versus supply. This is globally. I showed you guys this chart before. Globally, we're going to demand a lot more, but the supply is not there. Right. So I'm not looking at just Silicon Valley. I'm looking at globally, because if this wealth inequality expands, then this model right here, or this system that we naturally have because of our age differences, is going to be in question. Because it's like, well, who's making the rules? These guys are making the rules, but the game's not really sustainable.
Right.
So they have to give back a little bit to keep it right. So when I see trillion-dollar companies like Microsoft, Amazon, Google, Apple, it makes me feel like the game's getting really big. So this is what it looks like right now. So I took a picture of this sometime this week, probably on Friday. This is the scoreboard right here. I should go a little bit lower. Right? From the biggest company to the smallest, well, not the smallest, but the top 10 biggest companies in the world. Oh, well, there's another one. Oh, no, sorry, it's Google. So Apple, Microsoft, Google, Amazon is close by. But yeah, I mean, that's wealth inequality for you, man. I think like the average Facebook employee is not even 100,000, it's like 200,000.
Why does- why
300,000.
Why is Google listed twice?
So they have, I think it was like one is more preferred, or one you have voting power. The other,
Class A and.
yeah, it's just class, but
The same is the case with the Berkshire Hathaway, it's a class A and class B share.
So if you add those up, they are the biggest.
I don't think you add. You don't add.
No,
those
no,
up,
you don't
though.
add.
You don't add. It up.
Similarly, I think the Berkshire Hathaway, I think class A share, each share is $300,000 plus. Class B share is around $230.
Is one the superset of another?
So why don't you add them up?
Yeah, that's weird, right?
If they're not the superset, if they're distinct, then you should add them up.
Right.
I mean, they're relatively close in market value, right?
Yeah.
So is one,
At this point, $1 trillion. What's the difference of 20 billion?
so
Is there an overlap?
so is one the superset of another?
Is there an overlap? Yeah, because we got the.
I don't think so, though. The way I've always looked at it, and then the way I've always digested financial information, it's always like different classes, but I still see them as that's the market cap. I don't combine the market cap, because if that's the case, then we have a $2 trillion company.
So it has to be overlap.
Yeah. I mean, I think some of the shares might be priced a little bit more, but
In case of Google, both the shares GOG and GOGL, both are close to $1,000. They track really closely. But there's a big difference in the Berkshire Hathaway. Class A share, you and I, we can't buy. I mean, maybe some people buy because each share is $300,000 plus.
yeah.
So, but the Class B share is $230.
Yeah.
So, yeah, but in case of Google, both are almost the same. So I
Yeah,
don't know where they did that structure.
Well, anyways, moving aside from that, when I look at this, right, knowing that there's two companies here that I saw become a $1 trillion company, now I'm thinking like, oh man, these employees got stock options, like they're getting really wealthy, and they're gonna make the area a lot harder to survive.
Yeah.
I was at Whole Foods the other day, and I'm thinking like, okay, I'm gonna, cause you know how Whole Foods has the hot bar, and you just measure like how much you eat. I swear, I kid you not, the same amount I always get is about $5. Now it's like $7. Then I'm thinking like, oh, okay, I guess I have to shrink down a little bit more then. But the environment will really influence you, and I see that, and I don't think at this point, from an investor perspective, yes, printing money is good, but it's not good for the general population, because at the end of the day, these guys at the top, they're trying to defend the game. Think about it. If you were 100 millionaire to even like 10 billionaire, at this point, your main game is probably not investments anymore. It probably is, but your main game is probably politics because you want the game to keep going. Because you established yourself so high up that now you understand that for this game to continue, meaning I go to work for income and pay for this real estate, roof over my head, is if we continue to play the legal system. But when all that puts into question, then it doesn't work anymore. Like your $100 billion status, if the legal system breaks down, it doesn't mean anything. So yes, I see the incentive to sustain the game. It's very important. I want to show, so there was a billionaire meeting this week, or in the last 2 weeks. It was in Switzerland.
Welcome back to Squawk Box.
You guys know Paul Tudor Jones, right? I just want to show two insights in terms of what they have to say. So 20 seconds with Paul Tudor Jones, and then I think 30 seconds with Ray Dalio. So how does he feel about the current market environment?
Well, we're just, again, in the craziest monetary fiscal mix in history. It's so explosive. It defies imagination, and I don't think anything's changed. It reminds me a lot of early 99. So early 99, we had 1.6% PCE, 2.3% CPI. We have the exact same metrics today. The difference is Fed funds were 4.75%. Today they're 1.
So I won't get to technicals, but Paul Tudor Jones, looking at his portfolio real quick, current portfolio. So this is the gentleman that just spoke. This is a $3 billion portfolio, though I think he has more. Now I'm thinking they have other vehicles out there that Guru Focus is not showing me. They're only showing me what's public. But this is his portfolio right here, and then his biggest weighting. His biggest weighting is 7% SPY puts. 7% SPY puts. As of November though. We need an update.
That was not good.
Oh.
We don't know if it's long or short.
That was not good for him, huh? I mean, no, he also has SPY calls. But the equivalent is like 125 over here.
But
so,
do we know whether it's a long or short? SPY put is a short put or a long put?
It's a long. I believe it's a long. Now that's a good question too, because I don't think this platform will show you they're shorting puts, but that'd be extremely interesting. Yeah.
Well,
Yeah.
it should. You need that.
Yeah, it should. And that guy has a right to his privacy too.
You don't know if you're doing a spread or just a single.
Yeah, exactly. So I mean, when I'm kind of just going around the billionaires club or whatever and just listening to like what they have to say, a lot of them are just saying that everything looks pretty insane right now, and we're in a regime that they themselves have never seen before, and they're trying to figure out how to play this market too. I agree. Whatever textbook you read out there wouldn't really make sense.
Is it true to say that we're in a bubble and we all know it? It's just that the government is now okay with that?
I think we are. Well, okay, I don't think we are. I know we are, but it's becoming reality.
Yeah.
Meaning it's becoming infrastructure. Like as in, let's say, like in Japan, right? They printed so much money, and we were trying to figure out where the money went. It didn't go to real estate or stock market, but it inflated into consumer saving accounts because they have a culture of savings, right? For us, when we print money, it seems like we consume, we go buy stocks, or stock markets immediately respond, right, after it deploys from the sovereign down to the producers. And then consumers will reflect it in real estate prices. But I just feel like at this point, after lecturing for so long and learning about the economic system, all the value really goes into two things. I feel this might be too narrow-minded in terms of a comment, but it comes down to stocks and real estate. That's all I feel. So the sovereigns will, the governments will deploy the money, right? Do their engineering, bring the money down, and then the producers or the corporations who could hire financial analysts, like someone like myself who understands money is cheap, then I would say let's go borrow on the cheap, but we won't buy real estate. We'll go buy stocks because it's just a lot easier to transact digitally. So stocks will be the initial response, and then it'll trickle down through wages to employees who are like now like, oh, I have a lot of money. I don't like to play the stock market. I'll buy real estate. So now I look at real estate prices as the reflection of what the consumers are doing. And I look at stock prices as the reflection of what producers are doing. Those are just my two cornerstones right there.
Are you putting bonds in with stocks for?
Oh yeah,
stocks?
we'll look at bonds and all that as well. But the bonds it's an interesting concept as well. Like who's issuing those bonds and what their financial profile looks like. Well, treasury bonds or corporate bonds. So if you look at treasury bonds, it's like questioning like, oh, this government's printing unlimited amounts of money and interest rates are going down. We didn't do our global view, but I wanted to bring in Ray Dollar real quick and listen to this part. How long is this? This would be, okay. So here's Ray Dalio's comment.
Issue is you can't jump into cash. Cash is trash. Okay.
Cash is trash. Okay, that's like a new like internet meme or something right there.
Okay. Cash.
Warren Buffett.
He called him. He basically called him trash, but
Cash is trash. Okay. Cash is that they're going to, because they're going to print money. What do? You get out. Okay, so cash is not going to. So
what do you do?
So what you have to do is you have to have a well-diversified portfolio. First of all, you have to be global, and you have to have balance.
Making the argument effective.
yeah. So to answer your question, Joe, like you asked me, like, are we in a bubble? Yes, but I also want to say this is the new norm, because the more I think about the platforms of society, right? The main platform that we have is our world. This is the most important thing right here. Like, if anything, the realest problems in the world, it's going to be climate change and population growth or resources and all that. That is the realest problem or environment or whatever we have in the world. Then on top of that, we stack is the legal system. Now, what's after that? On top of the legal system, after that, we have basically asset prices, right? Or asset prices, and then we have people. Okay, you could judge me on however I place this, but I'm just trying to do like a quick explanation right here. So this is how I see it. This is the I should put money. I forgot one. Just 1 second. Sorry, JC. I saw your hand, man. Let me just draw this out real quick. So right here, these are tangible assets, okay? And then this one is money, right? And then on top of that, we have people. So this is kind of how I perceive the world. What's happening right now is that this is becoming trash, right? So this is people, and then right here is trash, or at least when they print money, it becomes trash. So I'm thinking from a just simple process perspective or a systems perspective. If they make this into trash, where will we go for store of value? Because store of value has to exist. Then it'll go to tangible assets. So that's why I'm bullish on industrials like oil and gas, because they're beating down real estate, industrial real estate. So the question is, what happens when they kind of engineer value out of that by putting more taxes on tangible assets? You see what they're doing? Like they'll say, okay, I should draw one more. It's taxes right here, right? But then when they can't tax you anymore, they'll devalue the money, and then people will default to real estate, and it'll reflect in equity prices and real estate prices, tangible assets. But then when they go in there and raise the taxes on tangible assets, then where do we run to store our value? Right? They're always going to be borrowing value from us, so we have to learn how to tax optimize. That's an extremely important skill set moving forward. And then after that, let's say, to guarantee this, it needs to exist on the legal system. If this legal system collapsed, none of this even matters because you don't own that asset. The legal system is basically the thing that's holding you from owning that saying that you have equity in that house or that stock, right? So when that collapsed,
Yeah, right.
well, I mean, the most important one is the world, really. So climate change and all that, that's the most important problem in our world right now, I feel.
Getting back to your, is it a bubble or not? I think it's important to define what is we say like bubble. Was it 2000 when it went down 50%? Was that a bubble? Was it 2007 when it went down 50%? Was that a bubble?
Yeah.
29, 80%. Are we saying that bubble is, if it goes down 20% from here and then we go to new highs after that, was that a bubble?
Yeah.
So I guess we got to define what is bubble.
Yeah.
Means that we're going to go half, we're going to lose half of it. It's going to be a 10% correction or 20% correction.
Yeah, so the way I see it, Joe, it's debt is becoming infrastructure, meaning it's very normal to have debt. And for people who are like positive net worth by like zero are like above average. Seriously, like it's not even funny. I don't know if I could even draw that, but let's say this is the real value line, right? And then this is the premium line. So this is what I perceive right here. We're currently in an environment where there's a lot of premium, and after some point it needs to deflate back to real value before we could go higher. But every year the infrastructure is growing higher and higher, if that makes sense. Infrastructure, because if you think about Warren Buffett or whatever, he talks about, several hundred years ago we didn't have roads or whatever. Now we have roads, now we have trains, now we have technology. So every year we're building new infrastructure, and it helps to understand these new emerging infrastructures that come to the world, because you could leverage it and get a lot further than if you didn't. So those are things I geek out to.
So I want to share one thing. So I've been listening to an audiobook which is about the battle between Bill Ackman and Carl Icahn over Herbalife. An interesting comment that I heard yesterday, and that was in 2014, Mr. Carl Icahn, whose net worth is now $20 billion, it's all his money, no other investor's money. In 2014, he comes back on CNBC and says, these all stock prices are inflated, our government is keeping the interest rate down, I'm getting bearish on it. And that got me thinking, thank you, Mr. Icahn, but 6 years later, we still have the same situation. So I don't know, whether it will continue for another 6 years, because if Carl Icahn can't predict, that it's going to go down or not, what we predict? I don't know, will this rally continue for another 6 years? Is it going to go down in the next 2 years?
But the more I teach guys, I apologize. Like, it's becoming like a game to me. I know life is a very serious thing, but the legal system is artificial. So I'm a finance degree, and there's someone that could go and practice law. They focus on contracts, right? Someone like me, I focus on contract value, right? So I could trade that contract value. The contract of a piece of real estate, the contract of shares. But the legal guy focuses on just constructing that contract. So real estate contracts or stock contracts, public stock contracts, they're very standardized contracts. And I'm just the value specialist. I'm not the guy coming up with the clauses and all that. They are. But this legal system, I realize, is that they create the boundaries of the game that I'm playing with the prices. Isn't that fascinating when you think about it long enough? And all the changing dynamics that happens in the world. Here's a really interesting cartoon. Central bankers putting out a fire with gasoline. If you didn't notice that. So that's really our world today, and they have no choice. They're in a lose-lose situation, and so that's why I'm extremely bullish on gold. Though short-term gold looks okay, maybe a little slightly bearish, but I'm extremely bullish on gold long-term. Educational opinion only. So gold miners are having earnings sometime this week, and think about it. Gold has been elevated, and they've been distributing at an elevated price. Then I forecast earnings to look pretty good. So if anything, I'm not trying to encourage a trade or provoke a trade. I have a lot of minor positions already, but I personally think moving forward into this next week before earnings, it might be a good idea to consider some. Because they've been distributing or producing gold and selling gold, and earnings hasn't been reported at an elevated gold price. So if we go down and look at gold real quick, what is the price of gold? Should have that chart in. Oh wow, it's all the way down here. It's getting pretty high, but okay. So here's gold right here. There's some news as well. So gold's been in the last quarter, right? Well, I guess depending on their fiscal year or whatever. Let's just say right here, gold's been elevated at 1,500. They've been distributing at this price and not at this price, not at 1,300. So they have expanded margins. These miners have expanded margins. I would figure that if they have earnings in the coming weeks, they're going to look really good. So those same miners that I'm looking at, I'm still looking at them today. I might even position more, but I have a lot already.
So you have a major position in the miners.
Yes. So it's all around. So the way it's so funny. I'm playing whatever I mean, if the environment was different. If it was like 2008, then I'd be like equities, or if they're printing money in a bottoming market environment, I'd be equities. But from what I know about the world today, it just seems, and also listening to the billionaires, it just seems that the miners to me are perceived as a very safe position where I could scale up, right, and sleep at night. Versus like, you know, doing calls on like something like a medallia or pager duty. That's like less than 1% allocation. This is stuff where I could do upwards of, you know, 5, 10, 15% portfolio, where I'd be happy, right? And then also looking at beating down oil and gas. But then right now, oil and gas is getting hit with the coronavirus, right? So fear, you know, prices get, but that's okay because the industrial tangible asset class looks really good to me. So they're paying like 10% dividends. What was it? I forgot. What was the ticker symbol on some of them? Where's my FinViz? Right? I know Oxy took a hit, but hey, they're paying like quite a bit of dividends.
Right.
So Oxy's paying 7.54% dividends. From a technical perspective analysis, yeah, I mean, it could go lower, but looking at book value at almost 1, and this is like a major blue chip, this is like, these are places to store money. You go to Chevron, right? Chevron looks pretty good too, and this is, again, another blue chip, 4% dividend. I think the really, what was it, MLP, I forget, MRP? MMP? Yeah.
What's your opinion of Cisco? They're another dividend stock.
So Cisco's a different category.
Earnings on Wednesday too, by the way.
Okay.
I think they might get. I mean, they're. I know they're hardware software, right? So their hardware part component might be a little exposed. I mean, I'm a little bearish on semiconductors, though some of them are kind of rallying higher, like Intel.
Oh, yeah.
Yeah, Intel. So this one's for the data center play, right? But then if you look at other ones, like I know Xilinx XLNX. Yeah,
this has the results too.
Yeah, this one took a hit. So I'm not big on hardware. I'm more software.
Okay.
Software because I understand it a lot better than hardware.
Don't they say Cisco is now a software company? It's no longer really hardware.
Every corporation is trying to transition to a software company. Every corporation that is like a serious corporation that's trying to evolve, they're transitioning to a software company.
I see.
Yeah, so it's funny. I mainly focus on, it's your first time, right?
Yeah.
I mainly focus on enterprise software companies.
Okay.
So companies like Salesforce and stuff.
I see.
Yeah, that's really where the big secular trends in the next 10 to 20 years, at least in my lifetime. In my lifetime, I'm going to make a lot of software friends, I'll tell you that.
Of course.
Because those are friends that are going to appreciate and value.
This entire area.
Yeah, exactly. This whole entire area. So if you want to run a software agency business, it's hot here, because there is a very defined marketplace here. But yeah, that's my take on Cisco. Cisco, it's a big entity, and it's not full software. So I'm just kind of neutral on it, right? Not crazily bullish.
I don't think they'll take off in the 5G space. That's the hype around.
See, now 5G might be a little overhyped, I feel, and I think markets may have priced it in already. But let's take a look at the global markets and maybe close it out. So let's see. So what's the update here, guys? Central banks, have they been printing money? 2 weeks ago when we met, I thought they were gonna cut back, so cut back on the money printing, but it seems like they're just going sideways. So nothing much. This is the Federal Reserve balance sheet, in case you don't know. This is their asset positioning. So when they accumulate assets, they basically put money out to the system. We've been tracking that basically every week. Looking at the dollar over here. So the dollar has been rallying. That's not good for gold, but hey, if gold's sustaining higher and we have a dollar rally, that's very bullish for gold, right? So it kind of reinforces the position. Okay, sorry. Any question on dollar?
So can you explain the gold and U.S. dollar correlation?
I keep it very simple. It's really dollar and gold against everything else, and it might be boring for some people, but I draw it all the time. USD, what you see initially is gold, right? But it's actually, and then it'd be like 10 over 10. But when they devalue the dollar, it'll be 10 over 1. Okay. So now you got gold being worth 10.
So you're saying basically gold goes up when the dollar goes down?
I'm saying gold could go sideways, and I'm saying the dollar could go down, causing gold to go up. Okay. And gold's not really going up, right? That's why I'm bullish on Bitcoin. I haven't brought up Bitcoin yet, but it's hitting 10,000. I know, right? With a higher dollar too. So if you think about it from an FX perspective, that's a really strong move on Bitcoin. But to finish this equation, it's not just that. It's stocks, real estate. It's everything against the dollar. Because if you think about it, everyone's always in a position, right? You go to work, you go to 9 to 5, you make money, you make 100K or whatever.
Yeah.
You got that 100K, you're in a cash position.
Right.
And then you're like, oh, I got 100K. I'll go lever up and do 20% down, 80% more cash to buy a home. And now you're not in cash anymore. Well, you somewhat are, but you're in a real estate position. So everyone's in some sort of position,
Okay.
right? And it's very fascinating to see like what position are we in the aggregate? When you start aggregating the room and seeing what's everyone's net position,
Okay.
right? If I aggregate this room, then I probably, most people will say like in real estate, in cash, and then a little bit of equities, a little bit of stocks. That's the average tendency. Now, if you aggregate a corporation, very little real estate, a lot of stock, a lot of bought back stocks. So that's the difference that I noticed. So that's the dollar right there. We got dollar rally with sustaining gold. If you guys want to look at Fed funds rate, if you guys forget, we're at 1.75%. They were trying to lower rates right here. So lowering rates is, lower rates, higher prices. Unemployment rate and wages. So I thought this was pretty interesting. So the gray line is the unemployment rate, so it's been going down, but wage inflation has dipped in recent quarter. Isn't that fascinating?
It is.
It's very fascinating because prices, we know stock markets are higher, right? Real estate prices are kind of sideways, but wages are down. What does that mean for the average consumer? They're not making enough to right? We want this game to keep going. This is interesting to me. Back to 1993 over here. This is the S&P 500 price to sales ratio. It's interesting to me because we've surpassed the 2000 level in terms of price to sales. So we're hitting some record new levels that is just, I don't know what else to say. This is just the norm of the game until the game corrects. But when the game corrects, I think stocks will probably go higher. Because when we print money, stocks go higher. And I know we have to print money, because if you guys recall, there's different forms of defaulting out there, and this is a refresher for some of you. When someone like us, the average Joe, defaults, we go file for bankruptcy. When a corporation, moving a step higher, a corporation defaults, they go liquidate assets and file bankruptcy, return all the money to investors. But when a sovereign defaults, they can't, right? So they print money. So I believe that's their form of defaulting.
Is this chart range bound, or does it generally go up?
Does it generally go up? What do you mean?
Between like 0.9 to 2.3, is it normally range bound, or does it generally go up in the long term?
From 0.9 to...
From the left to right?
Well, I don't know if I understand your question, but it's just basically saying we're trading at a 2 times price to sales ratio.
Yes, does it normally stay between 1 to 2.3?
The average range. I mean, this is just over time. Like, let's say back in 2000, the average was 2. If that makes sense. And then back in, let's say, I don't know, 2012, the average was 1 times price of sales. If that answers your question.
Well, I'm wondering like 50 years back.
50 years back. Well, I don't have 50 years back.
Does it stay between 1 to 2?
I think it stays between. Oh, okay. I see what you mean. Yeah, I think from it depends on. I think it's a function of how long we live too, right? If you go 50 years back, I think people didn't live as long. So if they didn't live as long, then price of sales probably would have been lower. Does that kind of make sense? So I don't have the 50-year chart though. I just have like what's in our time frame right here since '93. Yeah. Looking over at the markets, so S&P 500 guys. I thought some volatility came. It did come, but then we reverted back a little bit higher. I don't know. I think this month still has some volatility to come. I'm waiting to hear the coronavirus news and see how it all plays out. So I'm just going to do a quick sweep around the world and show you guys what I see. So looking at NASDAQ, same thing, holding the 20-day moving average, holding 220, gap up right here, money printing as of money injection since Sunday announcement. Dow Jones over here held the 50-day moving average and still maintaining uptrend. Nothing much to say. The weakest one is probably this one, but it's still not that weak. It's holding the 50-day moving average. This is the Russell 2000. So that's USA developed markets. Okay. And then looking over at Nikkei, the other major developed markets. So again, it just money printing announcement, markets rocket up. Euro Stocks 50, same thing, rocket up. And then DAX just went right up, right at the announcement. Now me, trying to figure out if volatility is going to spike. Typically when this spikes, this is more advanced, the volatility futures curve will curve up like this. It's kind of flat, so I was anticipating volatility. I still am, but I think the whole money printing is, pushing that out, so we'll see. Positions that I'm using, so I had calls here, right? So I pocket some here, but then it went down. So I still have half a position, but I still anticipate volatility. So I'm still playing UVXY. This is more of an advanced, type of trader type of play, because this is a decaying asset. You just gotta understand that.
So you have long calls on that?
Yeah. So they were March. So I shaved, I had starter positions and I shaved it by half after it started breaking down. So I still want to, I'm still doing calls on this, but it's half of the starter position I have. Half of a 25% position. TVIX, so that's the other instrument that I'm looking at, but this one doesn't have calls. This one's shares. They have calls on UVXY though. If I recall, 1.5x, 2x. Emerging markets, so that one took a hit, right? And then money printing, so nothing much for emerging markets. Bonds, so bonds are kind of rallying, right? Indication to me that maybe fear, people are shifting out of equities. We'll continue to monitor that. Looking at commodities, commodities took a really big hit. So this is an ETF, DBC, it tracks, it's a proxy for commodities. Yes, it took a hit with like oil and copper. Looking at copper over here, this is what's happening. Right, so copper is taking a hit. Crude oil also taking a hit. I think crude oil will probably go lower, so I'd probably hold back on the industrial investment thesis that I have. Right, so I'm bullish on industrial stocks, like oil and gas and stuff, but then with this coronavirus, it's just being held back.
So if there was no coronavirus right now, do you think that would be a straight line, or?
If there was no coronavirus, so corona was announced somewhere around here, it'd probably be like sideways.
Yeah.
Yeah. Right, so those oil and gas companies will be very sustainable, but hey, we can't predict the world and what's going to happen next, but we can hedge against it. So this is just the best response that I have. Looking over at precious metals, so this was probably the major news this week. I don't know if you guys saw this, but JP Morgan's role in the metal spoofing is under U.S. criminal probe. So this is probably really bullish for gold because now it removes the big player manipulators in the precious metals market. Maybe.
Because they've been manipulating it for decades.
For decades,
Yeah.
right? Now that they're finally gone.
But they've always, there was a time when the Commodities Futures Commission was gonna look into it, and everybody thought, oh, it'll end, and nothing happened. They washed it away.
Yeah.
What exactly is
What does that mean?
metal spoofing?
Spoofing? So it's kind of like, let's do real estate. Let's say you own a property. Bernard's trying to sell his home, and you're trying to buy his home, but you're trying to get a good bid on the home. But then you got other guys coming in pretending like Bernard's cousin, whatever, saying, "Oh, I'm going to give this price, which is like 100K higher than yours."
That's fake bids.
Yeah.
Oh, is that what that means?
Yeah. So
fake bidding of a metal, like
Yeah.
overbidding? Oh,
Yeah.
okay.
They'll spoof the environment or whatever. Like they'll put in a bid and then they're like, "Oh, it's a sell," and then people sell down. It's, to me, I perceive it more like short-term manipulation, not so much long-term manipulation. I don't understand the long-term aspect of it, but I don't know. To me, it's more of like a HFT type of thing, high-frequency trading manipulation.
The people who talk about that say that they're suppressing the metals prices, and that's because they don't want, the theory is they don't want everyone to know how weak the dollar is, because the dollar is based on nothing. And right now,
that's a good theory.
we run our lives as though the dollar is real and it's usable because it works.
Yeah.
But once they realize it's all a facade, there's people who say, well, if gold and silver goes shooting up, everyone realizes they got to get rid of their dollars, and then who knows?
Yeah, I mean, I said some provocative stuff this week. Talking to some friends, we had some deep conversations. And I said, they keep up this money printing. I think 9 to 5 is the new minimum wage. That's provocative, right? But it is a concern. So looking at gold prices, for the most part, gold looks still pretty good to me. I understand that it might be a little overbought here because everyone's kind of slowly realizing the trade. But what I do see from a volume perspective is that we have a higher gold and then lower volume as well. So let's continue to monitor this. If we do get a pullback, I'm thinking maybe 1,500. But for the most part, I think it's getting this trade is becoming very real, right? Considering gold is at a 6-year high. Looking at the longer term picture again, it looks incredible to me. So For those of you who are not in position, I'm not encouraging it, just educational opinion only. This is what it looks like from a bigger picture perspective. Rounded bottom right there,
Yeah, that's interesting.
right above 1400. So I think 1500 might be the, that's the price where we're going to be for a while. And if miners are deploying or producing gold, pulling ounces of gold out of the ground and selling it at 1500, right? Versus several months back they were selling it at 1200. Now you're selling it at 1500. That's $300 difference. So every ounce that they pull out of the ground, they're selling it for $300 more. That's like if Apple could sell the iPhone instead of $1,000, it's $1,300. That's incredible. So this is an incredible trade that's setting up for gold miners. Well, I don't think anyone really sees it, right? It's like they just, for some reason, the crowd wants to buy iPhones for $1,300 and not $1,000 anymore, right? And the only ones that are buying it are like big producers, like like sovereigns are buying it actually.
So generally, you're favorable on GLD or gold miners for leverage.
Yeah, and for a very average Joe. Sorry,
That's me.
Joe, no. GDX is like a perfect instrument for the
What is
average person. GDX is a ETF, but it acts as a proxy for all the major miners out there.
An ETF for miners.
Mm-hmm.
Oh, I see.
Mm-hmm.
Okay.
So gold, let's say you got GLD, right? That's like 1x, but GDX is like 1.5x to 2x. And then GDXJ would be like 3x. And then options on that will be like further leverage, right? So up to you on how you want to position. For me, I have direct exposure to the actual miners because I just do the research and see who's producing and then see who's buying as well. So yeah, that's how I know. Some of the ways that I'm leveraging which miners to buy, if you guys recall, I look at one major fund out there, Tocqueville Asset Management. They're managing about $6 billion. And if I look at their current portfolio and segment it by basic materials over here, and I look at the weighting, and I want to see which gold company are they most bullish on, and now I have a good understanding. So Pass is my favorite silver one. Franco-Nevada, BTG is one of my favorites. AEM's in there. Nova Gold's really good. So this is how I generate gold miner security ideas. So a lot of these we covered already.
So, do you think coronavirus could hit demand for metals and therefore price goes down, or would it cause instability?
So for gold, no, I feel, because it's more, maybe a little blip in gold for coronavirus, because gold is more, hey, this is like the store of value that has to exist for the world, because we live in a social system. There's more than one people. For silver, poor man's gold, I think we'll get hit. So that's the sad part. I was like, darn, well, what better timing? But that also creates opportunity. So I think silver will be more sensitive due to its status as poor man's gold.
And copper went down for some reason too.
Copper is just like.
So both silver and copper have got industrial use, and
Yeah.
because of the coronavirus, we know industrial activity is going to go down.
So
That's
you
why
mean,
both the silver and copper went down.
so translate that to business. You mean China activity involving copper goes down, so copper's value goes down?
Correct.
Copper's like
Because
everywhere.
the demand for the copper
Yeah.
will be less because the factory.
Like building
will-
stuff. How
makes
could,
sense.
yeah.
And so that's why both silver and.
Yeah,
and,
but gold is a little bit different because gold is more of like a currency, right? It has an additional value than silver.
Yeah, gold is like equivalent to a safe haven. If the equities are going down, then people will shift to gold as a store of value.
Mm-hmm.
Copper was going down before the coronavirus aggressively. Before.
Was it?
Yeah.
Hey, you could say that. Actually, I want to look. Let's see. Copper before the coronavirus. That was about a month ago, right? January something was. I think it was like January, like early January, right? Well, I think it's right there, JC. I'm not sure. Anyways, so gold. So this is what silver looks like. So I'm a little concerned for silver, but that's okay. I don't mind adding more, but this coronavirus is not the greatest for silver. Platinum, to me, it looks kind of just going sideways to slightly higher, looking at 960 level, nothing much. Really what I'm looking at is gold. If gold goes up, then silver and platinum will follow. Bitcoin, so this one's interesting this week. This one's really moving higher. We're hitting 10,000. So I still remain in my views on Bitcoin. being like, millennials don't have a chance in terms of wealth building. They need some sort of asset class out there. Instead of like a stretch for real estate, at least real estate here is like 10x what they could afford. Meaning they make 100K and real estate's $1 million. So the valuation is a little out of whack for real estate, but you can't do anything about it. So this is that's what Bitcoin looks like. I think it looks really positive. We have a break of that descending triangle right there. So I still hold positions in it. Some of you guys are like, yeah, Bitcoin, but it's a risk portfolio. So let's call it that. Or it's a what the world looks like tomorrow portfolio. Who knows? Litecoin's the other one I would consider, but I wouldn't consider anything that has that's inflationary. So like Ethereum, I mean there's application use to that, but I'm just holding the ones that had limited supply. So these are the two that I'm looking at. Looking at the FANG index, so a little update here. You guys know what this is, the FANG Plus. So there's a FANG Plus out there. It also includes like Twitter and all that. This is moving to new highs compared to the S&P 500, but just a nice look to see where we're currently at. Yeah, I don't know. If you ask me, Joe, like, are we in a bubble? Yes, but I think that bubble is becoming crystallized.
Can they just lower interest rates from 4 to 3 to 2 to 1 and just keep this going?
It's already at 2.
Yeah.
It's already at 1.75.
Okay.
Well, when we lower to 0, so guys like Howard Marks, are very technical about it. They say if we go to negative rates, it'll have the complete opposite effect. So 0 might be the absolute. So as a monetary policymaker, right, as a central bank now, if I know my tools are being decayed, right, I used to have 6%, and then I could go to 0 to juice the economy. What can I do now when it's at 1.75? Well, I bring it to 0. That's not enough. So I have to figure out creative ways. Like maybe I'll loosen up legal systems, right? I'll inject more money somehow by accumulating more debt, right? Yeah. So there's other creative ways. And the more I talk about this, I started to realize too that just like how the sovereigns engineer money away from people, have you ever realized like employers engineer value away from employees?
Yeah.
Right? By giving you less equity. Like, I'll give you 100 million shares, but it's like 0.0001% of total equity. Right?
Yeah, McDonald's does the same thing. They try to lower the price of all their food, lower the cost of the ingredients.
Oh yeah. So yeah, you're talking about facing consumers, right? I was talking about facing employees, employee to employer. Now you're talking about consumer to business. From consumer to business, well, Apple could increase their prices and lower the quality. Right? They're giving you plastic now. I personally think the new iPhone, the back is, to me, it's like plastic, but they sold it really well. Like it's not metal anymore. It's plastic, but it costs more. So they're like, what do you call that? Is that like product inflation or that? Is that product inflation? I don't know what you call that, but it's a way to. Some people don't like being people who are too calculative, but as an investor, it's kind of like your nature.
Well, to me, I would just be, I see these guys moving into cash, and I think about doing it, but if they're...
But there's no other choice.
Trapped.
There's trapped, yeah.
If the governments are trapped and they're already okay with, if any little thing starts to cause a downturn, they just turn up the volume or turn down interest rates to counteract it.
Yeah.
I figured they could probably do that for a year or 2 years more. And you could see another 30%, 20% year on the markets.
Yeah.
Well, that happened to them just briefly in our last downfall. They stopped printing money, and actually they were withdrawing money from the system.
Yeah, exactly.
About 20%
Exactly.
in December, and then right away they started ramping up the funding again. So it's not like they're going to do it automatically, a 1% drop, but if it goes 5, 10%, they're definitely going to bring the rates to 0. So
yeah, no, you are.
That's exactly what
you are exactly right, because if you back test that, you could actually see what happened. So it was starting right here. February 2018, they started cutting back money printing. So that's the start right here, right? February, I already remember, February 2018. You go to the S&P 500 indices over here. So this already reveals to you that we're in a drugged out environment where we just basically need the gasoline for the fire. February 2018, right here, right? February 20. Oh, scroll down. February 2018, right there. 18 February, right? So that's when all the sideways movement started. And then if you look at this,
And then their famous meeting.
February
when they
2018.
said they're not gonna, lower rates anymore, and that's when the market collapsed right after the Fed meeting, and then they have to backtrack right away.
Yeah, so as you can see, my main indicator right now for where we're going in terms of market direction, and that will trickle down to all my other long trades, right, is really this right here. Like,
I haven't paid too much attention like through an earlier cycle, but last time, so this time I saw, okay, things are getting scary, it looks like we're in a bubble.
Yeah.
The Fed did exactly what I'd expect them to do. They would say, okay, we're gonna start raising interest rates so that prices come back down to earth, so people stop investing in these real speculative things.
yeah,
That to me seemed like the right action. But of course, Trump came out then and just attacked them, saying you guys are ruining everybody's lives, you need to start lowering rates now.
well,
Was that the difference between what should have been a 2008, or at least a correction last year, and basically where we're at now, where we're in a new era of, we're not gonna do the conservative thing
Yeah.
that long-term works out.
Yeah.
We're gonna do whatever we need to right now.
yeah. I think we're just gonna be, maybe at this point, like I've been saying that they've, since October 20 last year, I said that they successfully pushed the markets to new highs, probably for another year or two, right? Through engineering, money, more money into the economy and away from you, but also, increasing taxes and all that. I don't know anymore. I think at this point we're going to treat equities like real estate, meaning it's going to go up. Because the more they print, the more it's going to go into the corporations who will buy back the shares. The vast majority of stock market participants, remember that chart, are corporations. You guys in here are like, an outlier. Like if you're playing the stock market, you're an outlier as an individual, because all the ones that are playing are corporations. So I don't even read like headlines that much anymore. I just read press releases, because press releases comes from the players who are playing the game, right? I should just put that chart up in like a frame in here. So whenever we talk about that chart, and just point over there, because yeah, they're the only player. So to close it out in the last 5 minutes, I'm gonna go over the quick earnings real quick and just show you where it's at and where I think might go, and we'll finish there. So Apple had earnings, guys. Didn't really do much. It's still holding pretty high, 320 right there. But the results are increase of 9% from year over year ago quarter, and an all-time record.
Yeah, spectacular results.
Spectacular results. Also, I do feel that they're the most vulnerable with this coronavirus. Just to saying, in the next 60 days. So let's see what happens in the next 60 days. They've done really well, new record highs. That should mean new higher stock prices. But let's see how this coronavirus affects it. Looking at Microsoft, my #1 favorite company in the world, just keeps getting bigger and bigger, which is insane. This is truly insane. But yeah, I mean, their cloud is really growing. So revenue increased by 14%, net income increased by 38%, right? And if you're curious about what they do as a business, they have 3 segments: productivity and business processes, intelligent cloud, which is their B2B software, and then more personal computing. I'm kind of going quick, if you guys don't mind. Amazon. So Jeff.
Regarding Microsoft, if you were gonna get in on a pullback, what would you say?
170.
170.
Yeah, but 170 might be hard. It might be like 175.
And I remember when 150 was high.
Mm-hmm.
Yeah, I know. It's like that's what you coming in here. I don't know if you noticed, but like what I noticed when I wasn't deep in the markets was I was buying lows that were going lower, but the trick is to buy highs and it goes higher.
Yeah.
That's really the trick.
Right.
Like think about Tesla. You buy at the high, it just goes higher.
But at some point,
It's super counterintuitive to what the average Joe would think, but that's really the strategy of the markets. So Microsoft. Looking at Amazon real quick. So Amazon, they gapped up. Jeff Bezos sold about $4 billion worth. So he crystallized his net worth. Net sales are going up quarter over quarter right here, 87 billion. 21% year over year,
Jeez.
right? So they're experiencing a lot of growth. And their net income is up 8% year over year. So that was sales, and then this is net income. This is what they take home, right? So, Seattle, real estate. I mean, Facebook's taking home money, like 8 billion or 7 billion. What's that going to mean for us? They're going to hire more people, equip them with income, and those people are going to compete with other people trying to buy real estate. It's just going to be all right, it's an exciting game. In terms of what does Amazon do, right? 12% of their business is AWS. It's that orange component right there. And then North America or international is their standard e-commerce business. And then the headline this week, Jeff Bezos unloads $4 billion of Amazon stock in a week. I wish I could do that. Yeah.
We need to buy flowers for Valentine's Day.
Yeah, you can buy a lot of flowers. You can buy out the whole. Yeah, he could buy one. Yeah. Looking at Facebook over here, gap down, but they're pretty solid. Daily active users, and then this is it breaks it down in terms of like the rest of the world, right? Asia, Europe, and so forth. So their daily active users are pretty solid. Look at their revenues right here. Revenues are very solid. It's insane that they're around the corner. Apple, Google, Facebook. Earlier I said that we only have $2 trillion companies. Well, Facebook's up and coming probably. Yeah. 600 billion, 700 billion. So where are they located? That area will appreciate in terms of real estate. I at this point have the highest conviction to believe that. If not, then if that doesn't appreciate, then the employees are withholding their money and waiting for a crash. That means the employees' savings will increase. Then it'll be very profitable for a financial advisor to go in front of Facebook and say, hey, roll over your 401ks to an IRA, I'll manage it. So you can really see where the money flows. It's interesting stuff. Because it has to, so Facebook's value goes up and it'll be distributed to the employees. If they decide to withhold it, then they inflate in value and they're just sitting on savings. So as a fundraiser, if you're going to go out and fundraise, you want to think about who has money. Facebook employees. Yeah, they should have a lot of money.
So what you're also implying, by the way, is that the income separation in the Bay Area is going to continue to accelerate.
Yeah.
So the person working at Safeway versus the person working at Facebook. Facebook person buys the house for $10 million. The person who works at Safeway is going to be renting for the rest of their life. So I mean, that's what it means.
If they can afford it.
If they can afford the rent.
If they can afford the rent. Yeah.
It's really, and it's going to keep getting worse because that graph, you showed that other collective cloud graph.
Yeah.
It's going like this.
Yeah.
It's not going down.
We're just getting started here.
It's
Cloud is
2020. Get ready for 2030.
Yeah.
But this graph
cloud is just getting started. If I were to advise you guys, right, from educational opinion only perspective, it's defending from global macro would be miners or gold, and tapping into the biggest trend of our lifetime is cloud.
Absolutely.
Software.
Absolutely.
So we need to focus on that, and even if it means a recession, I feel, but it's getting very difficult for me to kind of make that happen because it's still scary for some of these premium stocks out there that are trading too high in valuations. But what can you do? Effective tax rate. I thought this was interesting. So this is Facebook's effective tax rate every year. Some years they're 43%, some years they're 11%. Last quarter, I'm sorry, this is by a quarter. Some quarters are 43%, and then some they're just 13, 11, 14%.
Why is that? That is all over the map.
That's a good question. I don't know why. It was in the notes of the slide. I didn't have it in here.
So it could be based on in terms of what the
This is
expenses
actually
they're
from
particular quarter.
from Facebook itself, investor relations page. So you see how I had like asterisks right here?
Right.
So it explains what the 40%, 46% is. Say again?
I'm saying it's also based on in terms of what the expenses they done in particular quarter. So based on their income, their tax rate will.
Yeah. So if a corporation is like one of the most intelligent entity out there to study, we want to mimic this type of tax, effective tax rate that they're doing and apply it to ourselves. At least that's my opinion. In terms of income, net income, quarter over quarter, Q4 picking up. I don't know what happened with Q1 2019 and Q2, but maybe they spent. Yeah, I see the asterisk in there. They probably spent a lot of money, which is good.
If you wanted an annual report that looked good, wouldn't you sort of make it so that it looked like you made a whole ton of money in the fourth quarter and then build it up for the next annual report? I don't know.
It depends on your time frame as an investor, right? And I have reports where I could pull up 30 years, But I'm just showing you the most recently that came out in the last week. So this was their earnings report. Right? I personally like to read them because one is good training. Two is that I get better at it over time and just understand like, okay, what's great at business? Because it's not just investing for me, it's also business, how to operate business. Looking at Google, so Google's still sustaining pretty highs, or chart highs. I'll read some of this stuff right here that I found interesting. Our investments into deep computer science, including artificial intelligence, ambient computing, and cloud computing, provide a strong base for continued growth and new opportunities across Alphabet. I'm really pleased with our continued progress in search and building two of our newer growth areas, YouTube, already at 15 billion in annual ad revenue, and cloud, Google Cloud, which is now at a 10 billion revenue run rate. Strong revenue growth, up 18% year over year, up 20% on a constant currency basis. To provide further insight into our business and opportunities ahead, we're now disclosing revenue on a more granular basis, including search, YouTube ads, and cloud. That's really cool. So now I can see the revenue on their other business models out there. And for those of you who geek out to that, because these entities after some point, they don't do just one business model. But because of their sheer size, right, at 1.4 trillion market cap, let's say if you're a software engineer in here or you know how to develop apps, you could actually create businesses around their segments of their business, right? So like how Apple deployed phones into everyone's pockets in the world, well, you could come up with an iPhone screen fixing business that becomes really profitable. So, or even develop applications on the iPhone. So there are ways to, I like to read it, maybe not always to invest in Google or whatever, but I like to come up with ideas and see the trajectory of the world. At least the trajectory of a whatever trillion company and which segments are really profitable and maybe where I could create a business inside that segment because they're just around the corner for us. Disney had earnings as well, but charts don't look too nice. From a bigger picture perspective, charts look really good. If you look at the monthly chart, this is what it looks like. I think Disney will go higher.
Yeah, sure.
I mean, we were saying Disney will go higher on this break right here, 120, right? Typically a break like this in a good environment, I usually see this going up to bigger market cap. So I see 180 very possible for Disney. It'd be a hard hold, but
I think right now they're just waiting for what's the impact of the coronavirus because they have to shut down their parks in Shanghai and Hong Kong. Now
it'd be wise for me to dissect which segments they make money in terms of like the theme parks and stuff. But revenues are up 36%. Sales are up 36%. That means like all the money they're printing going to consumers, they're bringing it over to Disney for that experience. Right? And then operating income's up 9%. Twitter real quick. So we're almost done, guys. I do apologize for going over. Twitter, I like this one. Looking at the reverse head and shoulders right here on the monthly chart. Earnings highlight 21% year over year. This is the number right here. Q4, 21%. Last quarter we were looking at 17%. Now it's experiencing momentum. I don't know if you see that. Right? So Twitter to me is like the cheap Facebook. It's a great opportunity right now. Educational opinion only.
Well, they don't have nearly as much cost as Facebook either.
They're profitable too. They're already profitable. And that's very valuable for a SaaS company. Uber real quick, year over year, 39% growth. So charts look bullish. Activision, this one looks bullish, but I won't go into details. ServiceNow also looks bullish, and then AMD. That's all I have. Okay, guys, I do have a hard stop. I gotta leave the office by 12:30. So thanks for coming to lecture 150. And I was a little sluggish today, but it's not coronavirus. We'll pick it back up in the next few weeks and see how we go. Yeah. Hey, no, thank you guys. Let's see. Okay, people on